Good morning, my free folk nation. How's everybody doing today? Could I add a couple of Y's if you can hear me? Hey, there's a guy. Good morning, Mr. Williams. Good to have you back. Good morning, producer 717. Good to have you back. I hope everybody hit the likes and the bells and drop comments. I dropped a video out there. Listen to me, I sound like Puffy or DMX. I dropped a video. I put a video out there kind of explaining the Fed and the asset purchase and how that's relevant. So if you guys have an interest, maybe after the show or during lunch, you check that video out. Throw some comments in there too and some likes. Hey, Miss Kerry, good morning. It goes a long way from what I've been reading. If you guys interact, like, and comment, there's a lot of love in YouTube, and then they start pushing the channel out, and we can get more free folk to join our nation. I find it pretty amusing. So today's the day. It's the Fed day, the day we've been waiting for, which obviously we don't expect them to raise the interest rate. And they really give us a lot of heads up before they do go ahead and do that. This way it's not a shock to the market. I don't know if you remember the taper tantrum of 2013, but that's when they first started announcing that they were going to taper off the asset purchases, and the market just threw a temper tantrum, took a nosedive. So they like to be transparent and give us a lot of heads up. This way they don't experience that again. Since, well, you know what? Let's just get started and look at the economic calendar, which we really know what that's all about today. So here's Wednesday. Oh, yeah, you know what? Let's get rid of some of these things. I had thought that I stored it and cleared it. We just need this site gives you financial news all over the world, which is cool. If you're trading currencies, you want to know what Europe is doing. So you could adjust the UTC, which is the time. UTC is over in England, runs down the center of England. France actually was trying to lobby to get it to run down the center of France. Like, we need to use that, move that. Okay, so here you go. At 2 o'clock, the Fed interest rate. Then around 2:30, they start talking. And that's really what's important to everybody today. What they're going to say, their comments. They're going to start talking about tapering off the asset purchases. And everybody just wants to get an idea of what their mindset is. But pretty much the market's expecting them to make that statement. And it'll be months before they do the asset purchases. So there's really nothing else going on ahead of that. Jobless claims are always interesting. We want to see them taper off aggressively, along with the initial jobless claims. But, an interesting thing is that just in talking to people, I'm finding that wow, I've run ahead quite a bit there. I'm finding that people are actually getting laid off. There's like a residual effect of the pandemic, and it seems like this is where the pain is coming in from all the suffering that people or businesses had over the past year. So it's interesting. I'm going to watch the job market and see or the new jobs reports and see if that's having an effect. GM spending up on EVs, that's probably going to hit Tesla, man. That's a pretty big adversary, GM and Ford. Okay, so still in the news, it's all about the Fed. And that's it. There's nothing else anybody's really looking at. Some economy news, but or company news, but that's about it. Yeah, air travel in Asia won't return to pre-COVID levels anytime soon. Yeah, I don't think they're having a great time with the pandemic and the inoculation or vaccination process. So, um, yeah, I think Asia's going to be hurting for a while. So, all right, that's pretty much it in the news. And the markets are flat, and I'm not really expecting much of it. So maybe we get some interesting people in here today, and we have some more interesting conversation like we did yesterday. Um, but as far as the asset purchase goes, so in prior to 2007, 2008, it's the Fed's responsibility to keep people working, maximum employment, and to control the price of goods. So the manner in which they do that is the interest rate, the interest rate that the Fed Reserve controls, and or the Fed fund rate. And that rate is basically the rate that banks lend to one another, and the Fed lends to banks. So if you don't know, brief background. The Fed Reserve was created, and I think, off the top of my head, I think it was created around the 1800s. But it's not part of the federal government. It's actually a private bank that its sole purpose is to lend to the U.S., to lend to the U.S. economy. And really, it's just the old, powerful money families that created America. And that's how they have their foothold on America. They have they control the Fed Reserve. They control the economy. And again, it's a private bank. It's not governed by the government, although they answer to Congress, and you can always see those meetings they have, and the politicians kind of celebrating themselves with ridiculous questions that just get a little camera time. But anyway, their sole purpose is to maintain the economy, and they do that by lowering or raising the interest rate. So if they lower the interest rate, then funds are easier to come by for the banks, and the banks are a little more freer to lend out, and that gets money moving around the economy. Inflation kicks in, and the Feds can raise the interest rates and tighten up spending, and then individuals stop consuming so many goods, and supply increases, and the price of goods come down. But in 2007, the correction or the financial debacle was so extreme that they realized they couldn't really stymie it with just interest rates. They couldn't drop the interest rates and wait for the effect, because it's like a trickle-down effect. They drop the interest rates, and then there's a lag time, and then money gets out into the economy, and things start moving. But it was so aggressive and so much momentum in the sell-off and the demise of the economy that I don't know, people would have resorted to cannibalism by the time that the easing of money would have set in, and people would have lost faith in the U.S. dollar, and economies really would have broke down. It would have been a real change of life. So they got aggressive, and for the first time in the history of our economy, they actually participated in our economy, and they did that by buying assets, and mainly treasuries and credit-backed bonds, which are the exact vehicle that destroyed the economy in 2000. They call it 2007 to 2008. But if you were in industry, you saw the crack in 2006. You saw the beginning of the end in 2006. With interest rates and changes of policy, and then the real estate bubble crack and everything. But anyway, they go back. Historians go back and say it happened in 2007. So I digress. So for the first time in history, the Feds jumped in, started buying bonds, started buying asset-backed mortgages and things of that nature. And for all intents and purposes, it did save the economy. I mean, it turned us around, and it got rocking and rolling. And there's a lot of debate on the merit of the program, because basically the Feds are printing up money to buy all these assets. And it's not a natural economy that we have. We're not surviving on our own well-being and efficiency. We're actually surviving because it's being subsidized by the federal bank, and they're just printing dollars to continue to subsidize it. There's a lot of controversy that goes around it. But basically, they can't do that forever, and they have to start closing out their assets. Now they're going to talk about closing out their assets, and they're going to probably not begin to sell off the assets, but they're going to taper off their buying of the assets. So they're going to start slowly tapering out demand in bonds and mortgage-backed securities. So obviously, demand wanes and then supply increases, and ultimately prices go down. So as they back off of bonds, the prices of bonds should go down, and interest rates should creep up a little bit. And really, they're unusually low. I remember I bought a place, real estate, in 2000 and in 1990, and the mortgage rate was 9.75%. Almost 10% on my mortgage rate. So now, I mean, you could get things for like 2.5%. So it's obviously abnormally low, and as a result of the financial debacle. So to see them inch up a little bit really doesn't have me worried. I mean, I don't think anybody should worry. It's going to, tighten up the demand on real estate, because people won't be able to afford homes, and then people who could buy maybe 3,500 square foot house now have to go down to 3,000 square foot or 2,500 square foot, because the operating cost on the house is just too great because of the rise in interest rates. But if you wanted to take advantage of this change in posture of the Fed and the change in attitude on the economy, you would short bonds, and you could do that through the futures market. I believe the symbol's LB, and actually, let me see if I can even get that up here. Oh, no, LB is lumber. I can't think of it right now. I think it's L. I used to trade it all the time, and I haven't, and that's how my mind works. If I'm not doing something consistently, I just discard the information. So anyway, you could short bonds, excuse me, or you can short an instrument called the TBT. It's an ETF that is short the 10-year bond. And, excuse me 1 second. So anyway, it's short the 10-year bond, so it's an ETF, and I believe it pays a dividend too. I do own it, and I recall looking and noticing that it had paid a dividend. It wasn't a dividend play for me, so I don't know what the yield is. I didn't do the homework on it. I'm just getting involved because I'm expecting it to start rising, and it's a long-term investment for me. And I'm going to forget about it until the posture changes on the Fed. But interest rates have been down so long, and they haven't raised them in so long, that it seems like it's almost inevitable that they go ahead and raise it now. So as far as my long-term portfolio goes, I'm pretty comfortable with that idea. So anyway, that's what's been on my mind for the evening, and it doesn't look like the market has done anything at all. On the screen, you're looking at the equities, and that ES0921 is the E-mini S&P 500 future contract, and that's the expiration date 0921, and they're going to trade that. It's called the forward contract, and they're going to trade that contract. And below it, the NQ is the NASDAQ, the YM is the Dow, and the RTY is the Russell. And then you can just see stocks quoted. Oh, and there I have TBT at the bottom, and it trades at $19.70. So if anybody has an interest in that, you can get a lot of information on your platforms, and you'll see the quotes, and you could probably find what the dividend is. I think it was like 2%. I don't think it was really anything substantial, but that's not what it's all about. Yeah, and I'm looking at CNBC right now, and they're kind of sensationalizing the meeting today. You know, markets are on the edge. Fed Reserve policy update in the face of surging inflation. Man, surging inflation. It's rising. It's rising. We don't have storms anymore. There's always a severe storm. It doesn't rain. It's always a severe rainstorm, severe snowstorm, surging inflation. But I get the concept, man. I guess I'm in that world right now. I I'm after the views. Maybe I should have severe interviews or severe morning wrap-ups, and I can get more views. Can you talk about how futures level can affect stock prices? Um, I don't. I don't see a correlation like that. The ES, which is the S&P 500 or the NQ, RTY, these are the future prices, right? And these are really just instruments, just financial instruments. And right now, the ES is up a point, okay? But it's really just subject to supply and demand. And it can kind of give you an idea of what the general bias is on the market at the open. But when the market is closed, they're just free trading on supply and demand. When the market is open, they're subject to market moves. So it would, you know, that would be the tail wagging the dog if the futures are moving around the market. So really, the market moves around the futures. If the market's ripping, NQ's ripping, and really the traders are looking at the same things we're looking at. So if they see a head and shoulders, then you're going to start seeing the futures will start edging down a little bit in anticipation of that head and shoulders cracking, and then the head and shoulders going down, and then the price, of the futures begin to change. So it's just like the options traders are watching the market and the options prices. The put can get aggressive if it looks like there's a down pattern or a reversal, or the calls will get aggressive if it looks like it's going up. So we're all trading the same thing, but the futures during the market open are subject to what the actual indices are trading at, and then in the evenings they're kind of free flowing. But it gives you an idea. Nobody's taking a position contrary to what they feel the market is going to do. I have traded oil when there was a lot of volatility in it. And actually, I haven't looked at it, but I know that it's moved up nicely over the past few months. But it doesn't seem like it was that aggressive. But I don't know if it was a year ago. No, it was probably like 2 years ago, through October into January. And the swings on oil were incredible, and that's the CL contract. If you're looking at the option at the chat, Steve asked me about CL. So the swings were amazing, and any volatility type setup just paid off, man. Even if it didn't go your way, it would pop you away like 5 points and then turn around and go the other way. So it was just so easy to make money in it, and it would just scream back and forth. So and you can use the same exact setups that I teach here on this channel in any market, and people do consistently. So it's very effective in CL. It's very ZB. That's what bonds are. It just came to me. It's very effective in bonds. So, if you have an interest in oil, you can go ahead and trade that. But again, I'll trade any instrument that shows me volatility. That's all I'm looking for. And if I have volatility and momentum, that's it. I could trade that instrument, and I could do well with that instrument. Yeah, bonds are up. They're quoted in 30 seconds, so bonds are up 11:30 seconds right now. Yeah, thanks, Eloy. Yeah, I came into the industry in the early 90s, and I worked for a bunch of mentors and traders, a lot of guys that you see in the news and they make movies about, and they taught me the business, and the business clicked for me. And I'd say by the later 90s. I mean, I think I was in the industry maybe 3 years, and I was already managing a firm for somebody. It just really hit. Like sometimes you just find things that you can get into, and this was one of them. And then I was actually hired by another firm, and I'm kind of elusive because I like my anonymity. But I was hired by another firm to manage them and get them going because I had developed a good reputation for growing staff and growing desks and things like that. And I worked for those guys for like 6 months, and I don't know, they were great guys, and I made some friends, but they were just door knockers, and I just saw the writing on the wall that they weren't going to survive. So I wrapped that up, and well, I left them, and I told two guys who were apprentices of mine that yeah, I was going to start building my own bank, and you know, once I get everything together, I'll give you a call. And they didn't care. They just quit that day that I quit. I was like, no, man, I don't know if I could do this because you know, I'm just starting from scratch, and I don't even have anybody backing me. You know, and I did it all with my own loot. So anyway, I got the bank off, and I think '97 I launched it, and I launched it with like 3 guys, and you know, when. And then I did that for 20 years. I had an investment bank, I had a broker-dealer, and I had a private equity company, and I had a trading desk in the broker-dealer. And, you know, I had about maybe 13 licenses with the NASD and the SEC. And yeah, that was it. That's my experience in that. And then as a result of you know, financing companies and being in the business world, I was in many different industries, took part in them, built businesses. I even just finished one that was a weed company. So got it registered and everything, got it up and going, and then sold that company. So that's my background. That's what I did. That's how I was in finance. And after 2007, I kind of got disenchanted with what was going on. I kind of got bored playing Master of the Universe, and just got a little spiritual, and just started directing my life in that direction. So by 2011, I had converted the companies into employee-owned companies, and left everybody in good shape. And yeah, you know, obviously I did very well, but I stepped out of the industry. I still have a little financial interest in a couple of financial companies, but I'm really not active. And I went off grid. And I went into a couple of different industries, but you know, I went off grid and took my family out of the city and did some sustainable living for a while. And then, you know, because of how we value education, we moved them someplace that was a little more competitive education-wise. So we did it for a couple of years, and they loved it. But now we're just more focused on getting them educated. And actually, one of my spawn, I got up and running, and you know, she's wrapping up her schooling and education and going out into the real world. And I have one more young spawn to get done, and that's it. It's a wrap. I cut the chains that bind me. So that's my background, and I've been trading ever since. And now I just trade proprietary funds, and I talk to a few old clients. Those are kind of the people that drag me into things like the weed company and stuff. They just, yeah, you know, I'm effective. I could get things done, so they like me to take the lead on that. So every once in a while, if they have an interesting project, I might participate in it. I talk to them from time to time and guide them on their investments, just to keep the relationship. Really, I don't charge. I'm not a financial advisor anymore. Yeah, you know, nothing I'm doing here is financial advice, but I like to share what I know about trading. So you hang out, you see my my technique and my views on the market, and you get to see me experience what's going on, which I find is probably the greatest benefit to everybody, because dealing with the emotion and the psychology of the market and the effect it has on you is really important. Thank you for congratulations. I'm just having fun, really. I mean, I'm just living life and everything. So anyway, having this experience, and with me is better, because you'll get to trust your own judgments. Because you're going to see when I flip out about something, or not flip out, but when I get a little rattled, or how I deal with situations in the market, how I deal with errors, and things of that nature, and it'll help you have confidence in your decision making, and that's a big part of trading. A lot of people just can't develop the confidence in their decision making when they're trading, and then they don't execute the trade, or they don't take the loss, and that's important. Just as important as having a good setup and understanding your direction and things of that nature. So yeah, that's what the channel's all about. Congratulations. Okay, so it's interesting, but it's no great accomplishment. What I did, like I said, I graduated high school. I didn't go to college, although I do consider myself educated, because I just love to acquire information. But I think the most important thing that people need to learn as far as growing their lives is be receptive to the information that's presented to you. Every day people come into your lives, and I believe it's for a reason. You just have to be open to that experience, and just wait and see what the reason is that things come into your life. Even a smile, somebody throws you a random smile, engage that. I mean, I'm not saying grab the guy and start licking his face or what have you, but engage that smile. Wish them a good morning, ask them how you're doing, because everybody is coming into your life for a reason. Everything comes into your life for a reason, and you have to sit back and just kind of figure out what that reason is, and you have to open yourself up to the experience in order to get the clues of what that reason is. And if you're willing to do that, you're going to find opportunity everywhere. Opportunity is going to be all around you. It's a terrible thing that goes on with all the poverty porn and hate porn that's pumped over the news. We kind of block ourselves off from that open experience to try to protect ourselves. And if you played the odds, probability is that there's little that's going to hurt you in your life. You have to be wise. You can't be naive, but you're probably not going to get hurt. So it's good to open yourself up and be receptive to all that information. Good morning, John M. Thanks for joining us. Hey, everybody, hit the like, hit the subscribe, hit the bell, and drop some comments in some of my videos. So all that stuff goes a long way. And YouTube will, if everybody's interacting with me, YouTube will pump out my channel, and we'll be able to get more people to join our Free Folk Nation. So anyway, as I was saying, that everybody should be open to these experiences and just see what's presented to you. And it's just interesting. It's like it's a beautiful thing, the universe. You throw out a vibe and you hang out, and before you know it, the universe presents to you what it is you want. You think about your goals, keep a positive mind, and open to all these experiences, and before you know it, you're on the path to whatever your goal is. It's very interesting. Being a human is very interesting. I mean, we should have been born with a user manual. People are missing it. Everybody's forgetting that they're actually animals, and they're not keeping their bodies healthy and fit, and the way an animal does. And we came up with these cliches like "don't body shame" or "be happy with who you are," but no, you shouldn't be. I mean, if you're not healthy and you're not being a good animal, you don't have a good head about yourself. You need to respect your body, respect your mind, respect the earth and the universe, and you live in harmony with it like every other animal on the planet, and you have a successful and productive life. Or at least that's what I feel. So, sound body, sound mind. I believe in it wholeheartedly. And who needs the cost of Medicare? I mean, I don't take any prescription drugs, and I'm kind of up there. I've even had a heart attack, and I still don't take prescription drugs. I cured my environment. I eat well, and I live well, and I live in a good environment. And and that's all I need. I don't need to see a doctor every 6 months, 8 months. I mean, I did that for a little while, and all he told me is, you're fine. And I knew I was fine. I don't know what the hell, I'm making that deposit into his retirement account for. I don't take their drugs because, they don't do enough homework on it. And when I do the homework, I see it's more destructive than constructive for me. Everybody has to make that choice for themselves. I'm obviously not a doctor. Oh, there we go. The market's open. How dare it interrupt my gabbing? And we're up 3 points. And I'm really not expecting a whole lot of action out of the securities. But anyway, bad health is a drag on earnings. So you take good care of your body and put good things in it, and you don't have to make a monetary investment in it. And if you figure we've been around for 10 million years, the medical industry is maybe 2,000 years old, I'm going with experience. And my body has 10 million years of experience of taking care of itself. So I'm going to rely on that first. And then if it fails me, I'll invest in somebody else's opinion. So anyway, I'm just watching the market tick out, and we did a little run up, and it looks like we're testing that 42.52 of yesterday, and really this is the interesting thing right here. If you look at the daily bar, we're in the middle of the daily bar, so really none of these trades are going to be anything worth taking for me until it breaks this high or this low, because you're just going to be range bound and chop around inside that daily bar. So right now it's just an inside bar. I'm hoping no news from the Fed creates a nice inside bar, and then tomorrow a nice break to the upside. But hope is not a plan, so we'll just watch it and see what goes on, keep our minds open to it. But this is what I'm anticipating. So my bias is really just a range-bound day and nothing going on. And I'm not taking a trade today. I mean, I'm just not taking a trade in front of the Fed. And there may be money I leave on the table, but in my experience, probability is telling me that I won't have a successful trading day, or experience is telling me that I probably won't have an successful trading day if I take trades here. Although that break below the low right now is kind of encouraging. But I'm going to stick to my discipline and not take the break. But that would be a viable trade on another day. That would even be a trade we're looking at. In the morning, we're looking for a breakout, and the breakout should be below that low. And you see how now it's even behaving? Like a break below the low does what that bar just did, which is it just takes off and heads down. And now we're at yesterday's opening day range. Opening trading range. So we just broke into that. There we go, and we're filling the gap right there. And regrettably, it's only like a buck, so there's really nothing in it. So no great opportunities out here. I'm sure if Anthony's awake, he's taking the trade. That man loves to trade. Oh, look at Tesla. It's ripping up a little bit. There's 5 points in Tesla right there. Amazon is trading off. It's still up 9, but it looks like it's retracing. Oh my God, the Russell just took a nosedive at the open. Composite is just trending up, which will probably turn the S&P around. But the S&P is trading off and filling that gap, obviously. The financials are trading off. Energy's trading off. When I say trading off, I mean trading down. I'm assuming we're getting good stream and my sound is good. I went back on some of my videos that I put up, and I found that the sound is not working out. So I'm going to try to work that out before I do the end of the day wrap up today. But hey, if you're new to the channel, hit the like, hit the bell, hit the subscribe. There's a Cash app link in the description if you guys want to support the free folk of the world. I greatly appreciate it. But comments are huge. And I put a video up this morning that kind of explains the Fed and pretty much interest rates and how it works in the economy. So if you have an interest, you could check that out, listen to that, comment on it. Any comments helps me design the channel and correct any of my shortcomings. So likes, dislikes, comments, accolades, berating, it's all of value to me. The stream is amazing. All right, cool. Hopefully the content is amazing also. And we could just keep this going. We're actually doing phenomenally well. I think we're at 225 subscribers. And we're a week and 3 days. I think we started this Monday, right? Monday would be the 7th. Let me see. Yeah, we started this last Monday. And we're already at 2.25. And from what I've read, it takes like 3 months to get 100 subscribers. And, you know, that's great. That's great. And yeah, if I can get to 1,000, then YouTube will help promote the channel, and I can get a nice big trading nation up here. So I want to thank every one of you people in the Free Folk Nation, because that's what you are. You join me and you become free folk. You have the ability to earn an income wherever you live, wherever you are. And that's what we want to do. Oh, look at that S&P. It just shot right up to the open. It's testing it right now. And it actually popped right over that open. And that pop usually makes me nervous because it looks like it's what's called a run on stops, and then it turns around and trades back down. Oh, and there it is. There's the down. See, that's why I don't like that pop. When I'm trading that and I see that pop, I usually take a portion of my trade off. See, and that's why I made this channel. Oh, and Amazon, very interesting. If you look at Amazon, that's called the shooting star. See how it gapped up, made that little doji, and now it's just tanking. That's a reversal pattern. If everybody's looking over at my crosshairs on the Amazon chart, that's you don't see that very often. So that's an excellent pattern to trade. It's so rare that you want to take it every time because you don't see it. So yeah, you know, this bar closes where my crosshair is, and then it gaps up, and it makes this little doji, this cross, and then it gaps down and goes down, and it's called a shooting star. And yeah, man, I mean, you very, very rarely. I bet it'll be years before you see such a perfect shooting star again. I started reading trading for a living. Thanks for the suggestion. Yeah, it's phenomenal. And I actually did it on Audible because I still like to listen to it. I think it's great quality, and a lot of the books and psychological stuff I listen to again and again, or market psyche stuff. So anyway, it's cool because you could be out gardening or what have you. You have your earbuds in. I don't know if you're down with earbuds yet, Kerry. But you have your earbuds in and you can just listen to it. But yeah, it's good stuff, good quality. And if I recall correctly, if it's not this one, it's another one. But I think it is this one. This guy is from Russia, came here with like nothing, and you know, lived out of his car and stuff like that, and then became a trader and wrote the book. And you know, a true self-made man. So I'm sure he broke down everything and just analyzed every aspect of his experience. So yeah, I think that's a good first read. 232 subs. You'll be sharing your channel to get you even more. I'll be sharing your channel. Ah, thanks a lot there, producer 717. Yeah, share that, baby. Share it. Let people know. I could use the deposit in positive karma. So look, that's a pretty interesting pattern on the S&P. Yet, you know, we closed the gap, came back, and now it looks like we're just trending back and forth inside of that gap, creating congestion, and the market's trying to figure out its direction. Even Amazon had moved into a consolidating pattern, yet, you know, creating a channel. So you could argue that this is the channel, and down here. For those of you who just want me to demonstrate a channel. Oh, there you go, and it just broke out of the channel. So now I would just I would stay with the high and the low and call that the channel in Amazon, because it didn't respect this line. It broke out, but it's not running. It's creating a bull flag right here, but it's not running yet. Might run off that bull flag and test that high. But again, because of this inside pattern, I would argue that you don't take any trades until you break the low of the day or the high of the day, because you'll just end up getting chopped up. You'll get many, many entry signals, but you won't get the follow-through that we're looking for. And Amazon, if we look at it on a daily, I wonder if it's giving us the same representation. Nope, it actually popped up, and it's just in this uptrend. Amazon. But it appears that people are rolling back into growth stocks, which would be like high techs and things of that nature, and that's good, because when they're buying the growth stocks, we're getting a lot of volatility, which gives us a lot of opportunity. Oh, you're listening to it? Yeah, that's good. Yeah, I like to do that, and the narrator's voice is kind of pleasing if we both have the same copy, so it's easy to listen to if you're doing an audible thing. Yeah, it's an interesting time we live in, man. I mean, you could drive in the car and educate yourself on things. I mean, I'm learning languages with all the information that we have access. I mean, back in the day, you had to go to the library and look up your book and find your book, and you can only acquire so much information, you know, so quickly, because it was laborious just finding the information. And now it's all just a drop. It's just a drop right in your hands. Blows my mind. All right. Somebody said they can't hear me, but everybody, I guess everybody could hear me well. You're all responding to me. Somebody shot me an email and said they can't hear me. I think people are messing with me. Stop messing with me. Let's see. Could I turn that up? No, I'm tweaked. That's about as hot as she gets. Oh, sorry about that, folks. I was just going to see if I could adjust some sound notifications here. How am I doing now? Yep, looks all right. Did it improve any? Yes, you sound great. All right, cool. I appreciate it, Tommy. Yeah, that's the system. Yeah, I don't think I can make it any better. It does look like it's coming in a little low. Testing, testing. Test, 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 test. All right, well, anyway, I think that's pretty much the extent of it. Yesterday's closing candle as a, yeah, you could do that. Well, I wouldn't call it a channel. Okay, a channel is very specific. Like a channel, you know, starts testing. I'm making if you look at the Amazon chart, a channel starts testing highs and lows, and then trades between those highs and lows. Okay, so you know, you could call this a channel. I mean, it popped up a little bit over here, but yeah, you know, nothing's ideal. So so now as it drags out, it's creating a channel, like digging a channel. So if we look at the daily, which I misplaced that chart. Okay, here, right here. we're just inside the daily. So I'm assuming that this is the trading range. I wouldn't call it a channel until it starts testing these highs and lows. And what I mean by testing is that it moves up and bounces off of it, and then moves down and bounces up, and and then it keeps consolidating and moving sideways. Then I would say it's developing a channel there. Because right now what we have is an uptrend. Each bar is making a higher high and a higher low. Right now, where we are for today's bar, and you can see the daily chart right on the screen, where today's bar is at currently an inside bar. And we can't really define it as an inside bar until the close of the day, but we've started out halfway between yesterday's trading range, and we're just moving around in there. And so I think that we'll probably maintain that position until after the Fed, and then it might break one way or the other, or maybe it'll just close as an inside bar and give us a setup for the open in the morning. But so we won't call that a channel yet, and we won't see a channel on a daily chart until the daily chart starts moving sideways. But on a lower time frame, let's see if we could identify. Well, here's a 5-minute chart, and you could argue that this is a channel, although it would probably create like a pennant. But this, I would say, is my channel. So it's more like a pennant, right? But inside the pennant is creating a channel, and then it'll break on the trend line. I mean, if it gets too long in the tooth, there won't be an aggressive break. But if it happens quickly, then you can get an aggressive break. And you could monitor that by watching the momentum. Like over here, you have a decent downward move, and now it looks like it's tapering out a little bit. But that's creating a channel in the shape of a pennant, and you would call that a pennant. You might even be able to take it from there and show a consistency in that trend. I wouldn't really use this one, but I guess you can. And that would be a pennant, and you could look for a break of it. But it's so long that I don't think that it would make such an aggressive break. And this red line is just showing the low on my 5-minute period. The yellow hashed line is the open, and the green, obviously, is the high. So this is what's going on the 5-minute. I'm not going to leave these lines there because they're going to distract me. Pennant. All right, more questions. I'm smart like a whole university. What do we have? Okay, gotcha. Oh, look at that. First few days we have technical problems. Now I have a drip. What's going on across the board? NASDAQ's pushing up, and it's up 35 points. That's not bad. Dow's only down 30, so nothing aggressive going on here. Today's Wednesday, no moves. What's AMC doing? For the AMC Nation. Let's take a peekie. For the apes of the world. The master traders. Yeah, stream is amazing. Started rating. Okay, saw all that. No. Hey, don't forget to like me up if you like my stream. YouTube will get behind me. Oh, it gapped down. Looks like it's probably going to fill that gap to the upside today. It's down 3 points. Today's no day to worry about it. Oh, there it goes. Fill in the gap. Nope, nope. Look at that. Look how erratic that share eats. So silly. Yeah, I wouldn't even look or consider. I mean, I just kind of figure the day's canceled due to lack of interest. Bink. Amazonian starting to bounce around. When you see those gaps in Amazon, that just means that the volume is fading off, and now it's gapping around, which is always a good indicator of what's going on in the market. You know, the volume fades off. But if you're just joining us, welcome to my Free Folk Nation, off-grid trading. And what we do here is we talk about market psychology, and I teach you setups and show you how to make money consistently, like a professional trader. And if you like what you hear, hit the subscribe, hit the bell, hit the like, and you can hit up the cash account. The link is in the description. So that's it. Subscribe, subscribe, subscribe. And then YouTube will pass my account around, and before you know it, we'll be our own country. We'll create our own digital currency. Yeah, the market's not even down a point. I mean, we're just not moving anywhere. Probably have a 7-point opening range today. What do we got? Yep. We have about 8 minutes left to the opening range. So we could reasonably conclude that this is the high of our first 30 minutes, which is our opening range. And now we'll just wait for the low of our opening range, and we'll probably trade within that. And these two yellow lines are the opening range from yesterday. And you can see how we're just respecting that range. So that's just a congestion, like the average price of stocks over the past few days or past two trading periods. I'm going to change that color so we could identify it. And I'm kind of feeling something in the range of, oh, sea green. I can go for sea green. There's everybody sea green. And we'll do the same for the low once the 30-minute bar closes. And the 30-minute bar is a good insight into what's going on for the day. And look how interesting. An inside range bar from the that 30 minutes is the last closing half hour. And here is today's 30-minute bar, and it's actually inside that last 30-minute hour. So you can arguably play a break. But again, when the Fed is looming and oil's looming, you really don't see follow-through on the securities. So this is not really a day that I would trade. So, oh, I lost my thought. That's all right. There's another one right around the corner. So it looks like we're testing this low, and we're creating a little divergence. We'll see if it bounces off of it. An aggressive entry would be the next break of the previous bar's high. A conservative entry on this sort of setup would be a break of the 42.2601. And we would look at this as a reversal because we see that the momentum is turning on the 1 minute. And as it turns, we want to get in it. And to confirm that view, we would look over, I'm looking at the 1 minute, and the 1 minute's actually turning up. And the 2 minute is actually just flattening, which is encouraging that it may turn. The 5 minute is still rather bearish. But again, because of the climate of the day, I really don't expect a lot of follow-through on trades. So That is why I'm not taking these trades. But it's good to point them out so that your eye gets accustomed to catching that. And so far, this baby's just grinding up. Hasn't even made a lower low after the trigger point. So, you know, in theory, my hypothesis is working. Anybody new to the channel who want to say hello, drop me a chat. Oh, what do we got? Hey, Finn, you are new. Hello, David. Which one from the three is the best source of information? FT, Wall Street Journal, or The Economist? I can get free subscriptions for one of them and can't decide. You know what? Back in the day, it was common before everything was electronic or internet access, and news was so readily available. It was common for us to grab the Wall Street Journal, and there were two publications. The very early one, and I think it came out at about 5 or so, and I would grab that on the way to the gym. And then I believe the next was about 8:30. There was another publication. I would grab that, and I would always compare the cover stories of the two publications, and what was most important as far as market attitude and influence was on the two publications of the Wall Street Journal. But since then, I haven't really grabbed or read the Wall Street Journal. And there's actually a writer there who I think he's the editor now that I really enjoy, who is John Hilsenrath. And he's a great writer, I feel, and has good insight. And so there's a lot about the Wall Street Journal and the Financial Times. I don't know. Yeah, you know what, man? Honestly, everything's just so much sensationalism these days that I don't even know what you could rely on. But The Economist is good too. But I don't think that's not a daily publication, right? I think that's like a weekly or monthly publication. But yeah, you know, that has good insight and good stories, and that's cool to stay abreast of what's going on in the economies. That's good stuff. I think that I enjoyed reading the Economist the most out of all of them. The FT, I'm assuming, is the Financial Times. But so I think that gives you a good insight. But you know what? You could glean a lot of really good information right off of CNBC. You know, if you could filter out their sensationalism, you can get some good insight into the economy. I don't really like the company stories or you know, the CEO interviews and stuff like that, because it's just marketing for their companies. But some of the pieces, like Steve Gleason and I can't think of who the other guy is, the guy who's such a cynic. The CNBC Pro format. Yeah, I think it's actually, no, not Steve Gleason. I mean, I like Steve Gleason, but the other guy, Art Cashian. They're great. They're you know, real financial people who are reporting on the news. And Kramer, I've always been a big fan of Kramer. I know everybody looks at him like an entertainer, but I knew Kramer when he was actually a trader, and before he closed his firm, and he literally closed his firm because you know, if the market went down due to world issues, then people would end up suing him, which was consistent in the whole industry. But he was very public about bitching about that, and so that's why he stopped. He closed his hedge fund and just went more along the lines of a financial personality. But so, like I said, for a free resource, I find CNBC very interesting, and a lot of people co-post on CNBC. So you could go through the articles and you could find Financial Times articles and all sorts of collaborative articles that are interesting stuff. So, Mr. Finn, are you interested for long-term investment? Because that's the value I see in the publications you're looking at. There might be a delay, so I'm not going to stop talking and wait for your response. Hopefully you throw me a response. And hopefully I answered your question. I think if I had to take one, it'd be The Economist, the short of the long. But if you like what I'm doing here, Finn, hit the subscribe, hit the like, hit the bell, and then hit me up with a comment so I've got something to talk about. Because today is just a sleepy day. Hey, Tommy, if you look at the 30-second chart, you can see a channel right there. That little channel, it looks like it's about to break the resistance of that channel. But, you know, a channel is just really compression, an elongated sideways move. And 10 o'clock, so this is our low. So this is our trading range. And yesterday's trading range is actually inside our trading range of today. And let's assess our trading range. First, I'm going to make it that lovely sea green. It makes me yearn to head back to my boat, which I am tossing with constantly. And what do we have? We have 44 to 51. Oh, my goodness. 7-point opening range. Just so narrow. Nothing to do, nothing to make. It's just not a good trading day. Just not setting up for a good trading day. So we have a half hour to the EIA reports. And we could actually watch the reaction to oil on my market analyzer, or maybe we'll just pull up a chart and everybody could look at what oil does towards the EIA report. Yep, you bet, Finn. Happy to help if I'm of help. Mr. Williams. Yeah, you're seeing it. All right, cool, cool. Yeah, I know that's a topic for you. And you could see the rise here in the momentum and the rise here in the lows. You know, it keeps making a higher low. And then you would have your trend line right where my vertical white line is. And you could play that break. And, you know, it's coming back and testing the break. And like I've said 100 times since we started talking today, I'm just not confident in any follow-through in any of the setups in this market climate. So, yeah, you know, that's why I'm not throwing any money into any situations or taking a shot on anything. I mean, I'm not here to gamble. I'm just going to play the probabilities and make money. Oh, yeah, baby. Well, barring any unusual circumstance, income trades are all paying off, and today's an expiration date, so it should be a payoff day. Which is absolutely lovely. '21st is my highest risk day. Could have done better on that one. All right, anything? Okay, yeah, I'm seeing it. All right, nobody's interacting with me. I haven't seen Thalicia in quite some time. You out there hiding? I was at 200 subscribes yesterday, then boom, all of a sudden I was at 199. Was that Thalicia who ran away from me? I don't think she did. She came off the list. So if you're enjoying the content and I have something to offer you, do me a favor and hit the likes and throw me a comment. Let me know what's going on. Hit the subscribe button. I always appreciate that. Hit the bell so you know when I put something out. If you go through my videos, you'll see my end of the day wrap-ups, and you'll see how I look at the day to get my mindset for the following day. And first thing in the morning, we start here. We're actually going to start here at 9 o'clock from now on. It's working out well. And we do a pre-morning meeting so that we have a good bias for the day. And couple of training videos are out there, a little something on the Fed and interest rates and what it's all about, and we're just going to keep dropping those training videos as long as you guys keep dropping the likes and maybe throw a few bucks for the free folk. And everybody who's new to the channel, you'll see it's off-grid trading, and basically I'm an off-grid individual, and I live kind of a self-sustaining lifestyle, and I could trade from anywhere, and sometimes I'm on a boat offshore, not too far because I still have to get a little Wi-Fi to trade. It's going to be interesting because I'm going to do that and try to stream. So, yeah, you know, next week should be very interesting. But that's what it's about, trying to show people that you can cut the chains and leave the rat race and go out and make a living, and make a real good living, and live the beautiful life, the nice natural life. Because I'm sitting here right now listening to the trees rustle in the wind and smelling some sweet, sweet air, and watching some deer walk by one of the windows in my study. Actually a blonde deer, very interesting. And you might hear the birds in the background. There's a young eagle too. Oh, look at that, we're popping up. Amazon's taking off. Things are just getting aggressive and moving up. I lost my opening day high bar. My opening range high bar. Oh, there it is. It's quite a bit of ways. So yeah, I think we're just going to chop around today inside of that range. You can see we're still hitting where that gap up is right now, and it just keeps getting resistance once it gets into that area. And that yellow line that it's heading for, that's yesterday's opening range, which is yesterday between 9:30 and 10 o'clock. And you'll find that when you're range bound and throughout the day trading, that the market will gravitate towards the opening range. And you could do that on Amazon, you could do that on any equity. And it kind of gives you perspective on how it's trading. And this is not a bad move up we're looking at right here. We've already got 4 points in less than 4 minutes. That's not bad. Looks like it might be heading for the for today's open. But again, I'm not really taking any trades ahead of the oil report and ahead of the Fed announcement. It's historically just a choppy day, and when I go back through my log, which you know, it's on a spreadsheet, and I could sort it by dates or circumstance. I put in news for the day, another column. So how I could sort it through that, and I could see that these are, you know, like if I have losing days, they could be on this day, or you know, like real bad performance days, or a lot of trades with very little profit. It's usually on the Wednesdays and Fed days. So I historically try to avoid that. I started investing last year due to COVID, as there was not much else to do, pretty compared to my yearly income. This year, I'm trying to get more educated. Yeah, good. Hey, what I suggest is that you have an account with and you paper trade, along with me, and I keep talking about what my setups are and how I get involved, and really what I'm using, there's no magic bullet here. This is almost industry standard. Just about every hedge fund, every professional trader is looking at the same exact thing I'm looking at, and taking the same trades. All we're trying to do is get in on their buying power and take the ride with them. Yet, obviously we're not going to move any markets compared to the money they're representing in the market. But if we could identify what they're identifying and move the way they move, then we just make money alongside the movers and the shakers. And it's nothing mystical, or there's no hype, and it's not gambling. It's not AMC. It's not GameStop. It's not CLOV, CLOV. Those are fun, but that's not how you build a career. That's not how you build a profession in this industry. That's how you either get lucky or get hurt. And there's room for that, and short squeezes are a viable squeeze, but it can get a little more technical than just everybody carrying on. But we do look at it, and AMC is down $5. I wouldn't even bat an eye at that today, because it's more the market climate influence than AMC. Actually, I'm not even looking at anything that's up other than the NASDAQ indice is the only thing that I see up. Bonds are up 11/32, but that's it, May. Stock options. I appreciate that. Yeah, with your support, we're definitely going to grow. Yeah, that's actually what I trade. I trade the options, but I trade the options on the SPX. But that's not investing. That's trading. I mean, options are not a great investing vehicle because you're fighting time decay, unless you have some other form of strategy that's long term and you understand the value of rolling and things of that nature. Yeah, for a trading vehicle, I use stock options because my return on investment is much greater than if I bought the physical vehicle. Like I'll trade Amazon or I'll trade Tesla, and I could represent 1,000 shares of Amazon for maybe $34,000. But obviously 1,000 shares is like $3 million, right? Yeah, if I add 3 zeros. Yep. So the return on investment is much greater if I'm trading with options contracts than if I'm trading with the actual equity. Okay, I appreciate it. Yeah, don't sweat the Cash App. We're gonna put other venues on there that you could help support. I appreciate that. So if you could just bank that donation, or give it to me in likes and comments, then I appreciate it. It really is the thought that counts, and the opportunity to support the channel and help us grow will be there shortly. And I'm actually going to just work on that. Yeah, we're in our second week. We're 1 week and 3 days old. And we've had good success and lots of people are joining us. But the first week was just working out the technical issues. I mean, I'm a professional trader and not a professional YouTuber, and that was evident in the streams last week. And everybody who's part of the Free Folk since last week has been real patient with me and very supportive, and most of my fixes and cures have come just from the information I've gleaned off the chats, and I appreciate all that, and everybody's been real tolerant, but it looks like I got the stream right at this point, and I might have a few audio issues that I have to work out, but now I could start focusing on other things. I have a ton of training videos I wanted to make, and I just can't get to them. And then, by the time I get everything else done, my head is just not in it, and it's just not going to be a quality video. I won't be focused, and I won't have any enthusiasm. So slow and steady, we're going to try to get this thing going, and hopefully I get there before we hit 1,000 viewers, because at 1,000 viewers, then YouTube's going to start pumping my channel around, and I want it to be very nice and move or everything's efficient and people can access things readily. And then we'll see what happens, because I want to be able to stay in touch with everybody, and I want to be able to talk to everybody who started out with me. So I'm thinking I might create a private email that I'll distribute to some of you guys. In the event that it becomes too busy and you can't access me, you'll be able to shoot me an email, and I can answer whatever questions I might have missed, or give you guys some insight. I want, especially everybody who joined me at the start, I want you guys to have the same experience and access you've had over the past week. But this is just me thinking out loud. And yet the market's just bouncing around, doing nothing, and that daily chart is holding exactly what we said it would. It's doing that inside bar. And we like that because, that's a viable setup. The bar has to close, and tomorrow, if we close an inside bar today, tomorrow we're just going to play the break of the inside bar in either direction. If it's nice and small like this, that's nice, because the next test of the break would be up around 57. So we might get 6 points, so we could capture 3 points on an option contract and then play that break. If that break continues, then sky's the limit. There's no resistance above that. And then to the downside, we just have to fight all these lows. But let's hope it doesn't come to that. I don't want to see any downside. I'd rather the market just keep going up. I mean, we could make money in either direction, but better for the economy, better for people's pension funds, better for people retiring. I remember the pain and suffering that retirees were going through after 2007, 2008. It was heartbreaking. And elderly have to re-enter the workforce, and the environment has changed so much. They're really not trained for much, and which I believe in. Working into your old age, it keeps you sharp. But if you were out of the workforce for 20 years and then you have to join it because people were irresponsible and blew up other people's pension funds and 401ks and things like that. I mean, it's just a terrible situation to be in. Actually, Finn, I'm looking at Patreon, and I think I'm going to get that going, because then if you do support me, you end up getting some swag. So, you can get a T-shirt or a mug, or maybe you guys can come up with some ideas that are relative to what we do for the swag, and I can put that up there with the logo. If mouse pads are still fashionable these days, or I don't know, slide rules or a calculator or whatever, lends itself to our trading. That would be good swag. Or everybody loves a T-shirt. I love a T-shirt too, and hopefully I can find some organic cotton T-shirts that are made here in the States. And I like UV protection shirts too. I mean, I'm on a boat a lot, so I always look for that. So maybe we'll try to look at that. And this way, your contribution will you'll be able to look at it, and every day you'll know you did something to help me out, and I did something to make you look real good at the beach. Just nothing going on, ladies and gentlemen. Just nothing going on. Things going back and forth. You can see we traded inside yesterday's range completely. We went from the low of yesterday's opening trading range to the high. So, and again, these yellow lines are from the first 30 minutes of yesterday's trading. But you can see how they're being respected. So, very interesting. You can see the value in them, and you could determine a trade. So, this is only 4 ticks wide, so I wouldn't even bother trading it. But sometimes you can get an opening range that's 30 points wide, and then it would trade like this back and forth. So then you could find a bottoming pattern down here and trade it up, pick up 15 ticks. Topping pattern here, trade it down, pick up 15 ticks, and do that 2 or 3 times a day. And that's how the money's made. And that's what, hey, good morning, Zach. That's what the market looks like in the fall and winter. That's where it's most volatile. In the summer, you get the doldrums. So that's what we're actually been dealing with over the past week. And then to compound that, obviously today is the Fed meeting. So so just a boring day. But look, here's if it was wider, here's just 2 trades right here, and this is the 30-second chart. If we pop this over to a 1-minute chart, we could probably see decent double bottoms. Think. Nah, it's not really representing any good double bottoms. I think I like the 30-second chart better. And there she is. Anybody have any other questions or want me to look at another security or anything that I can answer for you? Or even off topic? Today's a good day to be off topic and have a good time. We had some good conversations yesterday with my Bulgaria buddies and all my Italian friends. Bulgaria. Yeah, I definitely want to go hit Bulgaria. I wonder if he's listening today. So, Zach, when do you start your lifeguard position? How do I figure out my wash sales? Well, you know what? The way the platform that I trade in reports, they do it first in, first out, and then they give my they do it right automatically. So my cost, according to their reporting, is my average cost of the security. So that pretty much takes care of the wash sale. So I'm sure that it reports that the reports are done like that. But really, I mean, I have an accountant who handles my interaction with the IRS, and then most of my finance they handle, and I mean. I've had my life arranged like that for years. Yeah, I remember when they instituted that wash sale rule. I believe that was like 95, I think. Or maybe it just first started affecting me around there. Yeah, yeah. Most of the big firms do, or at least on their platform. That's how I see them report it. You carry this average cost on your security from the time you own it. But I mean, short-term trading is a little different. A lot of my trading is options and futures, and it's very favorable for a trader. The futures options, and then the futures contracts, and then the options trading. I don't even know that they look at it as an asset. Bush Jr. era. No, I think it was before that they instituted the wash sale rule before Bush. Right, because Bush was around after 9/11, so prior to I think it was prior to that. My Puerto Rican friends. My Puerto Rican friends haven't represented. Like that hairy guy. Where's my hairy guy? My Puerto Rican Yeti. That's a good dude. He's hiding. He's hiding. Probably shaving, or maybe he went for a waxing today. Yeah, that is the downside. But you know what? That's okay, right? Just use the whatever vehicles they do have, and the stop loss is well, you can enter a stop order, right? On Webull. I mean, I'm not familiar with the platform, but can you enter a stop order on Webull, Zach? And you have to pay for the software's free from Ninja, but you have to pay for data. So you wouldn't be able to day trade, but you could you could practice charting, and you could do back testing and everything for free on NT8. Um, but how about E-Trade? Don't you have a little communion money left over? Drop $1,000 or $500 in E-Trade, and or TradeStation. I know they're very aggressive, and they're very accommodating too. They try to help their clients. So you drop a little of that communion money into an account, let it sit there. They it pays an interest rate. You know, there's a money fund when your cash is just sitting in the account, so it'll be paying you an interest rate. Don't mess with it and paper trade until you're good at it, and then you could roll over. I can do that in real trading, but it's different for paper trading. They only have buy limit and sell limit. You think. All right, well, you know what? It's good to have a practice of keeping that mental stop. And that's how I trade. I have the mental stop. And it's hard to pull the trigger, but you have to make sure that you do. And that would be good practice, that you get into that discipline, that you pull the trigger. Because sometimes when you put a mechanical stop out, it becomes a target, and the market makers will hit you. And you may be the only guy to trade at that low. You know, like this, you'll get out, it'll be the low, and you're the only one that was executed at that low, and then it turns around and goes the other way. So sometimes I don't like to show my hand. When I'm good and in the money, and I'm just trailing my stop, and I'm just protecting profits, then I'll put the physical stop out there. And if it trades back, they'll take me, and I won't mind. But you know, sometimes when it's my initial stop, you know, they'll knock me out of the trade, when if I wasn't represented, it wouldn't have traded down there. And you'll find that happens. So it's good practice that you get accustomed to having a mental stop and pulling the trigger when it's time to pull the trigger. And if you even let it go a quarter more, then bad trade. You know, you have to be disciplined. I mean, if you get hit a quarter lower, but you're willing to, but you execute it on time, no big deal. But if you hold out beyond your trade, you're not doing yourself any service. Zach attack. Man, you're gonna have a great summer. Gonna be a lifeguard. Girlies are gonna love you. Just be a gentleman. I think that's the best secret. I was always pretty handy with the ladies, and I think it just came down to I respected their secrets. So that's my tip for you, my 15-year-old friend. So I'm drawing a little line just to look at a trend. You know, the stock, I mean, obviously we're just consolidating and moving sideways, but it looks like it could get a little heavy right here. And I just want to see if it breaks that line and then busts through the trading range low. But there's a lot of support. I mean, this line would be support. Then yesterday's trading range low would be support. And then our trading range would be support. A lot of fight to get through it. And now, you know, all these pivots are actually resistance to get up. Yeah, you're going to be in the sun all summer. But you're Italian. You should have olive oil flowing through your blood. I mean, I probably the first day I could burn, but after that, I'm fine. But yeah, you know, I don't use any chemicals on my body, but I do make a practice. You know, get yourself a nice loose shirt and put it on you, and you know, a loose button down or something so you can pop out of it and save the drowning. But yeah, you know, something just to you know, keep the sun from beating on you. Nice brim hat. There's a zinc nose paste, and it's all natural. If you Google it, all natural nose paste that you could use. And that I actually probably will have that if I do create a Patreon account. I might probably offer that through the account, a lot of natural products. But, yeah, you know, no carcinogens, all natural, biodegradable, doesn't hurt the environment. You could go into the ocean. You're not causing any havoc on coral reefs or anything. And even the packaging is naturally sourced. So you don't have to worry about disrespecting our Mother Earth. And it's good for your body, and it'll keep that burn off, you know. Or a nice brim hat. Don't let yourself toasty up. Protect that epidermis, the largest organ in your body. But that subtle tan, you'll get that nice dark color. The girls will go crazy. Or boys, if that's your thing. A stock wizard and a Casanova. This is like Facebook, you know, where you just put out the positive highlights of your body, of your life. Yeah, I don't know about stock wizard. If I was a wizard, I would have been a prodigy, and yet, you know, I would have moved a lot quicker in the industry than I did. I mean, I realized quite quickly that I wasn't a prodigy. You know, it was work. It's hard work. There are guys out there who this just clicks and they make a fortune and they just run right off the bat. Yeah, you know, but anything could be acquired. Any skill could be acquired. I mean, it didn't take me as long as it took most, but there were a lot of guys who are a lot more natural talents than I was. But I'll go with the Casanova. Yeah, I was a romantic. I still am. I liked women. Still do. And I liked relationships, you know, especially when they're new and they're exciting and they're romantic. I love that. I think that's why, I mean, whoops, there we go. We just broke that line, but we have so much resistance around it on the 30-second chart that who knows if it's going to go any further. Just not a good day to trade. So I think that's why Miss Grid and I have been together for so long, because I think over the 20 years compiled, maybe you could say we spent 2 years together, maybe 3 years together. And I mean, if you took all the time together and condensed it into one unit, it would be equivalent to 3 years. And you know, absence makes the heart grow fonder, and it's always romantic when we're together because it's always new and it's interesting, and yet, you know, it's like a new date and we haven't worn each other out, and yet we get to share children and building a life and things like that, and you know, we talk a lot, and you know, we're getting to enjoy all of those aspects of being in a relationship without wearing each other thin. And you have to figure, you know, when I was running around in the world, I was playing the whole Master of the Universe game. So you got to figure how big my ego was, or my arrogance. And I've been an employer since I'm 19. So I'm very accustomed to people doing exactly what I say. And that's not consistent with living with 3 women. So you could imagine what that's like. So I really have to take time and decompress and compose myself so that I'm open to their views and their opinions and things like that. So, yeah, it was interesting, but I guess I tripped over the right person. And, you know, she didn't tie my hands, so she let me live up. Definitely gonna burn. Stock Wizard and Casanova. Oh, look at that. We're testing the low of yesterday's opening range. And there we go. A little rejection right there. See, and that's what I was saying. When we broke that piece, there's that trend line. There's a lot of resistance or a lot of support below that. And here, let's just open that up so we can see it. And we also have today's opening range down here is more support. And look, you can see it made this move, a very aggressive move down to break it and then pop back up. You know, and that's not orderly trading or orderly market movement. That's just light volume and things zipping back and forth. And here it broke off resistance and popped up. And that you can count that as orderly because that's what resistance is about. It's going to test it and pop off of it. But when it breaks it, it should break it and run. So that's why I'm not laying any money down. And what time is it? Oh, 10:36. Man, we missed it. I wanted to see what CL did. Oh, I don't think I'm getting CL quotes. I think we looked at that yesterday. I don't even know what oil is trading at, or what contract they're trading. Nope, they're trading July. So let's see if we can get it up. Get it up. Get it up. Yeah, I may not have this on this platform. C'est la vie. Look, and we're only down $1 for the day. Just nothing going on. Nobody's got any interest. Feds. So, any questions about asset purchases and Fed policies and things of that nature? You know what's interesting? Part of the asset purchase are mortgage bonds, and mortgage bonds are the direct cause of, or actually the synthetic swaps, but yeah, those were written against mortgage bonds. But mortgage bonds were the cause of the 2007-2008 financial debacle. And the Feds have just, the Fed Reserve has just packed their balance sheet with it. You know, the Treasury Department has too. The Treasury has participated in that asset purchase. I missed that guy Munchin. I think that's how he says his name. He was an old bonds trader, you know, so he was straight out of Wall Street, and they made him the Treasury Secretary through the Trump era, and that guy was just phenomenal. I mean, had a real good understanding of the economy, real good understanding of how to motivate the economy, and I mean, I just liked everything he said. I mean, to look at him, if you judge a book by a cover, you'd think he was a wormy son of a gun, but really intelligent guy, well thought out, and didn't seem like he had a bias. He had one thing in mind, which was just growing the economy. And, you know, that's what he focused on. So I miss him. I'm not too crazy about Yellen. She just seems a little too timid for me. A little too kumbaya for her position. But, I mean, now the test is about to come. We're about to see what she's all about. So none of my Puerto Rican friends are representing today. Maybe Yeti couldn't get up. Maybe he's still getting a waxing. Oh, looks like something might be going on with my stream. Did I lose you guys? You guys getting me? I mean, my software is telling me that I'm streaming. Oh, look at that move down. We're breaking below that today's low. So that's a good break below today's low. But are we still up? Everybody around? But again, if you look at today's chart, we're still I'm sorry, I was just reading something. All right, it looks like I still have people connected, but I don't see that. So anyway, I'm looking at the daily charts. Hopefully you guys are hearing me. I'm looking at the daily chart. We broke below the trading range low, which is the low of the day, creating a new low of the day. And looks like we're coming back to do the last kiss to give it a test. But again, because we're trading inside of this bar, you know, this is going to all be congestion and it's not going to move much. The trade would be breaking yesterday's low. And then again, we still fight these little pivot points, but you know, that's a lot easier than moving through all of this, wading through all of this trading to get to this bottom. So, and that's what's happening. And it looks like, you know, even these two on the 30-second chart, these two supports are so close that you know, I don't even really know which one they'll respect as the last kiss. So, you know, now we busted back up through here, but it looks like we could be making this the last kiss and could continue a downward move. And the momentum would support that. The momentum on the 1 minute would support a downward move, although it looks like it's flattening out a little bit right there. And let's take a look at that 2 minute. That 2 minute momentum is looking rather bearish. So we could be building a bear flag here on the 2 minute. That's a good entry if we break the low of this 2 minute bar. We could take that as a bear flag entry if we were so inclined to make an entry. But again, I'm still holding to that thought that I'd rather not trade ahead of the Feds, which I think is what's going on in the market. And then the 5 minute chart is kind of flattening out. You know, I mean, that I would be more inclined to look at that. Yeah, it looks like it's just in a consolidation, the momentum on the 5 minute chart. So I don't see a trade I would really want to take on the setup. I would have to wait for that 5 minute chart to roll over and kind of confirm that that negative move down before I'd want to take that setup. Nobody interacting with me. You sure we're still up? So my software is telling me that we're good. Anybody out there want to give me some feedback? Is this frozen? No, it's not frozen. I don't want to stop and start my stream. So none of my Puerto Rican friends are representing today. Maybe Yeti couldn't get up. Maybe he's still... All right, I'm not making any moves until I get some sort of confirmation. I mean, I'm seeing it here. I'm not seeing it over here. All right, I guess it froze on my side because I didn't even get those chats until I refreshed it. Yeah, we're good. Yes, all in cash, waiting for the Fed to pick a direction. Thanks for running a clean stream today. Yeah, I worked hard at it, man. Yeah, thanks for joining us. Appreciate you coming. So hit the like, hit the subscribe, hit the bell. You can hit up my Cash App if you're so inclined. Hey, Liz. Thanks for joining us with that bright smile. Need more coffee. Is that you who needs more coffee, or do I need more coffee? Are you inferring that I'm falling asleep, or I sound sleepy? So look, you know, here's the trading that's going on. I mean, it broke here, made a nice move down, broke the low of the day to make a new low, and then here's a double bottom, right? So that's what we look for on the reversal, and here's the change in the momentum that confirms our reversal. If you want to be aggressive, you can enter right here where my crosshair or my horizontal white line is at the 244.80. Or if you want to be conservative, you enter at the high. And that's where the reversal is actually confirmed, that it's actually happening at the 244.63. 244.8 to 244.63. So you really, I mean, you know, you're talking about 50 cents. I mean, no big deal if you wanted to just hold off on that 50 cents. But it's that's demonstrating the proper action. It's just the moves are small, the bars are small. Everything's just small. So that's why we're not taking the trades. I mean, because we would be risking, if we entered here, we could put our stop either down here at the 243.78 or at the very low, which is gives it the most room at the 43.60. And what do we want to risk that money for just to make a buck? I mean, I have no interest in a trade like that. And then look at the behavior. It just comes back. It returns on you 1, 2, 3. You need more coffee. A bit slow today. Well, that's all right. Enjoy it. The market's slow. Everything's slow. That's like when you were young and you were partying with young people and they get high on whatever their choice of poison is, and then they're flipping out on their high because they just don't ease into it. So you're slow today, ease into that, and be slow today. Maybe I should lay off those analogies for the public. Mr. Twitter. Can't really make out your image, but it looks like some Victorian period character. I guess that would be an avatar, would it not? Robotic Baby. Oh, stream is fine. Hey, I haven't seen you in quite some time. Thanks for pitching in there, though. And no questions, Robotic Baby? Give me some. Oh, Mohammed. Blackberry is down. Are you just letting me know, or you want me to talk about that? Are you asking me something about it? Blackberry. Yeah, I got bored with the damn thing. It's just not moving. It looked last night. If you looked at my wrap up from last night, I believe it looked like the weakest, and there was a probability that it was going to go close that gap. Mohammed, my friend, it's the first time I've seen you. So hit the subscribe, hit the like, hit the bell. And hopefully you hit a few good trades. Yeah, that looks kind of negative. You can see the daily momentum's pushing down. It's breaking. It looks like it's making its move for here. You're going to find a little support right in here, and it's not unlikely that it comes and fills in half this gap. So I wouldn't fall apart on the trade at this point. And today, you have to take the movement of today with a grain of salt because, like I've said 1,000 times through this stream, Fed. Every time I say Fed today, everybody's got to do a shot. So the Fed is speaking tonight, and they're coming out with their interest rate decision, which everybody knows they're not going to move. But what's more important are the comments that they have going forward, because it's going to give us some insight into how they're going to handle the tapering of their asset purchase. And that's what's important here. So any movement on the stock, I mean, you just got to chalk it up to day canceled due to lack of interest. And tomorrow we'll be able to see what the sentiment is on each particular security. But again, so if you were a shorter in the security and people put a move on your security to force it up, when the bloodletting stops, you're going to realize that this gap is out here. And that's kind of your saving grace, you know. So if you wanted to close your position to mitigate your losses, you would probably hold out because you could close down here. You could be pretty confident that it's coming, you know, either to this point or midway or down further. So that's what the shorts are looking at. Now, everybody's going to reanalyze it while you get here, because if you get buying power in here again, they don't want to hold out and take this pain. They'll close out, you know, over here, let you guys run this thing up, and then they'll fade that run up and make their money on the way back down as a shorter, because the fundamentals aren't changing with everybody moving the stock. But again, I would take today with a grain of salt, at least until after the Fed makes their announcements. So that's my hubbub bub, and if you like it, hit the like, hit the subscribe. I'm getting tired of saying that. You guys are probably tired of hearing it, but I need all that. And hit the bell so you know what I'm putting out, and you get to see some of my stuff. Any comments you have to make on my videos also helps me a long way. So it's you know, the likes and the comments and all that stuff, all doing me a favor. So, Miss Liz, am I familiar with AHT? Is that a security, or is it an acronym for something you participated in college during a frat party? So let me know. Miss Liz. I dated a Liz in high school. Actually, kind of your coloring, too. I can't quite make out your mug, but she kind of had your coloring. Oh, I must be having internet problems because my other platform just crapped out on me. Oh, look at that. Wow, I just lost my other platform. But we're still up and running. That's interesting. Oh, look, and I just got kicked off. All right. Watch, after I get my computer right and my mic right, now I got to replace my router. Anything else you want me to look at, Mr. Mohammed? It's a security. Oh, all right. Ashford Hospitality Trust. No, I'm not. I don't have any familiarity with it. But is there something you want to know? You want me to take a look at it on the day? Another high flyer, huh? Well, you can see the momentum has rolled. It hasn't made a higher low yet, so you could still argue that it's in an uptrend. I mean, from a technical standpoint. I mean, as far as the bar goes, this bar is kind of impressive. I mean, it dropped down, it opened this low, and it fought its way back. And you have a gap over here, so it's probably working towards filling that gap. But can I get some context? You bet, Mohammed. Happy to do it, man. If you can give me a little context on the security, I might be able to give you a little more insight, like what your motivation was for buying it or what's it doing. Hey, Anthony, welcome. So, Miss Liz, a little context, I might be able to tell you more. But, you know, technically, it's not really telling me anything. I mean, if I broke it down to the bar, that's a cool bar. It's still got a close there. There's a daily bar. You got a gap here that could be a target. I wouldn't take an entry if I was going to enter the security until it broke the high. You know, not mean. And you know I like to use my Fibonacci's. It did on that move a 38% retracement is healthy, yet not unlikely that you see the 50% retracement, which is at $4.81. A natural Fibonacci retracement would be the 55, and then 61 is not unheard of either. No way do I see a 76. So if I was trading this to the downside, those would be my targets. But you could start looking for a downside trade, maybe a bear flag or something. And the momentum hasn't quite gone bearish, but it looks like it's rolling over there. Ashford Hospitality Trust. Is this an ETF? Not a lot happening, Anth. If you're going to be on the road, today's the day to be on the road. Feds, 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 feds. That's like 4 or 5 shots everybody's got to do. We have a new game going. Everybody's doing a shot every time I say Fed today. Yeah, we're just waiting for the feds to speak and give us some insight into how they're going to conduct their asset purchase plan, or reduce their asset purchase plan. And to tell you the truth, they have said nothing about it whatsoever. So really, this is the first idea that we'll get on their thoughts about it, and we'll be able to chew on that and get a picture of what's going on. I had 3,000 at 280 sold last week to buy more AMC. Oh, all right. Well, you're done. I mean, what more do you need? At 280 sold last week. Could have been anything last week. Hopefully you sold it and made money. And hopefully you took that capital, banked it, and bought AMC with market money. This is what I'm hoping for you, Liz. Because, yeah, these are fun, man, and you're hitting them. But the probability favors that it could hurt you. I mean, but if you're intelligent and now it's trading higher after holding for a couple of months. It's a trust which consists of 100 of the most popular hotels. Yeah, you know what? That's a good. It's an opening trade. It's the economy opening trade, and that's even a good long-term hold. You should have kept a little bit on that. That you just leave as a runner. It doesn't have to be all or nothing. You know what I mean? Like, that's why I take my trades in thirds. Like, I'll buy units that I could break up into 3 pieces. So, if I did 30 contracts, I could take off 10, 10, and 10. And, that way I can get in there, bank some money, let it run, bank a little more money, and then I'll leave my runners on and, with a break-even stop and just see what I can get out of it. So, I mean, that's a good way to trade, and you don't really want to jump out of your winners right away, because your winners are your winners. You want to get out of your losers, but people look at it differently. They take their profits and leave their losers to sink. Markets turn around, coming back to the trading range, and really, this looks like a monster move, but it's only 2 points because the charts and the trading range is so small. And Amazon's up 24, but chopping around and gapping and just looking ugly and not orderly. AMC is just kind of trading around there. Get my other mouse. Yeah, we're down $4 today on AMC. Looks like it's putting in a topping pattern. That's an ominous pattern. What am I looking at? I'm looking at a daily too. Oh, there's a. No, we don't have it up here. Yeah. The numbers too for hotels are going to be affected by this summer, and I think this is going to be a good summer. So, what do you have? January, March, and June. And then September. So September's numbers are probably going to be hot for the hotel sector. It's going to represent everything it did in June and July. And that's the point where the fundamentals will probably kick in for that trust. Yeah, it was 25 plus a share. So really, you weren't even in a Yahoo trade like AMC or GameStop. I mean, that was good doings. That was a good value buy in a sector that made a lot of sense, and paid you well. And so I hope you left a piece. Did you leave a piece? That was a good move. Maybe you want to manage my portfolio for me? I'll just do the trading. We'll get a webcam and we'll put your smile on the channel. We'll blow up those subscribes. What am I looking at? Oh, I wanted to look at AMC. I got lost in thought. I was in another world. I was happy they know me there. So I'm fearing a double top on AMC. You see this high, and then there's another high. It turns around. I've seen this pattern before, and it looks like it's going to fade off. And this would be the test of this pattern right here. I mean, it's not a particular pattern, but I've seen this. No, I did not. I kept one share. Well, c'est la vie. But you know what? If you see it dip, you might want to take some of those profits and buy it back. You know, the hotel sector is a good sector. If you're familiar with the trading pattern of that trust and you're so inclined, it's definitely not a bad position to take an interest in. So AMC, that's got me a little nervous. Not nervous, but if things don't change, it could very well start sliding back. But again, today's a rough day to do a technical. You know, I mean, really, we'd have to look at this tomorrow and figure out what AMC is about. So like I said, day canceled due to lack of interest. Zing. Bada, 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 bada. Yep, you bet, man. That's why we're here. It's not just my pretty face. Yep, just chopping around. So talk to me, people. Talk to me. Give me some content. Can't just be the Dave and Liz show. Who's out there? Anybody new? Want to know what I'm about? Got a question to ask? If you're new to the channel, subscribe. Hit the like, hit the bell. I'm Dave Off Grid, and I used to be a financial professional, and now I am hiding out in the mountains. And the channel's about showing you how a trader trades and giving you the ability to make some money living off grid from anywhere in the world, as long as you can get internet access. And thanks to my boy Elon, that's going to be possible anywhere in the world. And I promise you, I will be streaming from the middle of the Pacific off the back of my boat. Actually, next week we're going to see how effective we are off the back of the boat. So I'm excited and I'm yearning. I should have been on the boat like 2 weeks ago, and because I started this channel and then started to enjoy it, I've been putting that off, and it's killing me, man. It's killing me. I'm just not a landlubber. Andrew Dwitter, Dave, any thoughts on IWM with these inflation talks? Any history on opinion? Mr. Dwitter, it's going to affect the markets across the board, whether it's the NASDAQ or stock or S&P or Dow. If there's inflation and they tighten the rates, there's going to be less money out in the economy, and then it'll come down to what companies are doing, if they're maintaining their earnings and earnings growth. So, I mean, there's always going to be a knee-jerk reaction, and that's what we're looking at. But the knee-jerk reaction isn't indicative of the effect that it's going to have. So, if you remember in 2013, they started talking about tapering, or they did a little tapering, and there was what people deemed that, what did they say it was? The taper tantrum. So the market threw a little temper tantrum and went down and just created a buying opportunity because the market's going to go up. So I'm very convinced that people are looking at it and really wondering about surprises. They want to make sure there's no surprises. And nobody's expecting a surprise in the interest rate decision. But it's the comments afterwards that everybody's looking towards, and what comments he's going to make in that. And as long as there's no surprises, we're not going to have a reaction in the market. And if we do, honestly, buy. Is my view, because you have to recognize that we are in a Cold War with China, and the weapon of choice is the economies, and we cannot lose a foothold, which is why I kind of resent the Democrats' behavior over the past year, because I think they were acting in the country's best interest. I think they were acting in their party's best interest, and we lost a lot of foothold on our economy because of some of their behavior. But and now I'm resenting what the Republicans are doing, because really we need to pass this infrastructure and get money into our economy, build our infrastructure, and put the investment in tech and research, which they did agree to do that. That I'm happy. But everybody's move is really to protect their party and try. Everybody's fighting the 2024 elections right now, and that's good for them in their careers, but it's not good for we the people and our country. So anyway, I'm going off on a tangent. So buying on dips is an excellent concept, because an intelligent Treasury Secretary is going to do whatever they can to keep this economy growing. And that's why I said earlier I appreciated Mnuchin. I don't even know if I'm pronouncing his name right, because he understood that. You're taking? Well, take. God gave you two hands, Andrew. Take. So anyway, if we do see a pullback, I'm confident that the Treasury Secretary will step in. I believe they're buying assets also. I mean, so the Fed may be tapering, but the Treasury Department may still be buying, buying back assets. So they'll do what they can to keep this economy hot. If they are keeping this economy hot, stocks are going up. I mean, it's that simple. It could even absorb interest rate hikes. So that's my opinion. I mean, the economy has been weaponized, both China's and ours, and the governments are going to do what they can to maintain a strong economy, because they maintain world power. They have the ability to influence smaller countries and things of that nature. And the U.S., man, they don't want to give up their stronghold. And to be honest, I mean, I don't want to see China as the world leader. I mean, I have firsthand experience with dealing with them and dealing with their country, and the whole culture is not consistent to a harmonious lifestyle worldwide. I mean, they inhibit the flow of information. I mean, some human atrocities, which are a reality, and they never go through with anything they say. I mean, it's even the nature of doing business with mainlanders in that country. And it's part of their culture. If they can beat you out of $1, they'll beat you out of $1. And in China, that's an acceptable practice, and that's fine, because that's their country, and as a majority, that's what they accept. But we're not about beating people out of money. I mean, the free world is about making money intelligently and equitable transactions where everybody profits. So anyway, if we do see a dip, I think it's a good buying opportunity. I think that if one market goes down, they're all going to go down. Just to surmise on your question, if one market goes up, they're all going to go up. So if there are no surprises, then just really this erratic, boring trading day will end, and we'll start to see some movement, and we'll start trending one way or another, up or down. And as a trader, that's all I care about, is that we're trending, we're expanding, either to the downside or to the upside. It's the consolidation that is just the doldrums for a trader, and no money to be made. No money. So tonight it's definitely it's oatmeal for dinner tonight. Last week it was like steak every night. So we got a whole bunch of viewers and we got a whole bunch of likes, and I appreciate that. But if you just joined us and you didn't hit the like, and subscribe and hit the bell. I drop some educational videos out there, and some informative stuff, like I did a little something something on the Feds this morning, so that you have a good understanding of what the Feds are, what the interest rate is, and how it affects the economy and things like that, or a reasonable understanding, shall we say. I appreciate the input, and the comments actually, from what I've been reading, are huge. So everybody who's chatting with me and sharing their stories or the questions are actually helping this channel a whole lot. So if you want to help us out, that's all you got to do. Drop me a question, man. Even if it's how did they get the M's on M&M's, I'm happy to talk. Steak, yeah. Loop and loop. Well, actually, when I say steak, I'm actually talking about a venison steak, a deer steak. I'm very particular about what I put in my body, so it's got to be natural. And when I can't get venison, which I harvest myself, then I eat grass-fed, grass-finished beefs. And oh, look at that. That's a nice little move right there. And it looks like a nice move, but again, it's only 3 points. You know, like 2 points, really. I mean, 380 to 635. So not a whole bunch of moves. So yeah, grass finished, grass fed. And I'll be honest, man, grain fed, nasty, dirty beef, a lot tastier than grass fed. But the difference in your health is incredible. It's like two different sides of the spectrum. Grain fed meats are full of carcinogens, and actually the animal itself wouldn't live past 3 years, because grain is just not a natural feed for cattle. It just fattens them up really quick. So we're actually eating unhealthy animals when you eat that stuff. And it's full of omega-6s and things of that nature, and it just becomes a carcinogen to your body. But a grass-fed cow, and grass-finished, it's important that it says grass-fed, grass-finished, is on the other side of the spectrum, and upon information and belief, it has more omega-3s than salmon does. And it's actually a superfood. So could you imagine that beef that everybody raves you shouldn't eat is actually a superfood if it's raised naturally, how God or nature intended it to be raised. So, and then there's this other concept of not eating a lot of beef after you're 40, a lot of protein, which is silly because you metabolize protein differently when you're 40 than you do when you're 20s. So you actually absorb about a third of the protein that you used to absorb in your 20s. So I actually believe that you should be eating more protein as you age. That's my personal opinion. And, to this day, I could still grow muscle. I go to the gym regularly, and I still grow muscle. And I'm a wee bit past my 40s. Just a wee. So, look, we came up and we hit that trend line over there. And, it was a nice, healthy, strong push-up. And still, only 2 points. It just looks like a lot on a 30-second chart. But that's what's going on. Hey, Alex. Hi. Tuning in the first time. The audio volume is too low on an iPad. Really? That's interesting. Yeah, I had somebody else tell me that, and I wonder if he's using iPad. Alex ES. Didn't we chat yesterday? You know what? Wait. Okay, let me see. How's that? Is that working any better for you guys? Now I'm getting yellows. Hey, Alex, give me some feedback. Did that improve it any? My colleagues always give me a couple of good chops during the Jersey hunting season. Yeah, I love venison. Yeah, I saw that. There's a video. I'll go in there and clean that up, Anthony. Thanks. Good looking out. Yep, the omega-3s is what the body needs. Yep, absolutely. Grass finished. Okay, so what happens is people will graze their cattle, but or producers graze their cattle. But when it comes time to bring them to market, they fatten them up in with grain, and it's that viscous fats that get saturated with the omega-6s, and that's the no-no. Oh, look at that. The market's just working its way back. So that's a 4-point move. I mean, still not our goal to just pick up you know, 2 points on an option, but it's a good happy move. And it looks like all the markets did that. I'm looking at the Russell's up, or made that same push up, and the composite made the push up. SPX made the push up. Let's see if anybody's spewing any news. I don't know if I finished my thought. So anyway, they fatten them up with grain, and then just ruin the meat as far as health goes when they bring it to market. So you want to make sure it's grass finished, because they finish the growing process on grass. So they've raised it on grass, grass-fed, and then they finished it, fattened it up on grass, grass-fed, grass-finished. The other thing is, when you see no antibiotics, you want it to say no antibiotics ever, because I think if they don't issue antibiotics to the animal within 30 days of slaughter, they could say no antibiotics. But the residual of antibiotics will still be in the meat and the fats. So you want to see no antibiotics ever. All right, I don't see any news that would have spurred that. So, you know, that's just people trading and pushing the market around. But it looks as though, well, we just went positive on the S&P. That's good. I mean, there's just nothing doing. So, I mean, this is good if you're doing income trades. Volume's low on my Mac, but okay, yeah, I'm finding that the recordings I'm making are low also. So I got to figure that out, if it's the mic that I'm using or if it's the settings that I'm using. And let's see if I could tweak this a little bit. Okay, and is everybody still hearing me? I have you on my car speakers, and I have it turned all up all the way, and it's pretty quiet. Yeah. Okay, you're still hearing me. All right, I think I might have done something that might have upped us a little bit. We're sounding good now? It's, yeah, it looks like I'm reading a little higher. I had some old school shotgun speaker that I'm using because I put together a desktop out of a whole bunch of different pieces I had laying around from one of my offices. And it didn't have a speaker, so I'm using this monotone old shotgun speaker. But could I get some yeses if I'm coming through? Uh, Actually, that's not from Wolf of Wall Street. I thought that line was from The Big Short, which is a phenomenal movie. But I think that's you're excited all the way up to your chest area. I don't recall it being in The Wolf of Wall Street. Okay, I'm assuming that yes is from Is that yes about my sound, or is that yes about my reply to the Wolf of Wall Street? Okay, I'm going to go with this sound and just assume that I might have made some difference in it. Big Short, yes, Big Short. Yeah, it's from Big Short. So, yeah, that was a great movie, man. I love the way they broke down what transpired. I think they were very fair to the characters too, in depicting them. Wolf of Wall Street. I mean, it's amazing. Like, you know, Gerard. Somebody's tracking me down here. Oh, here you go. You think that your brother's over 6 foot due to the grass-fed, grass-finished? Steve Madden. Yeah, he was a buddy of Belfour. And I think Belford tried to take his company at one point because he had options after doing the underwriting, and he had a legal right to it too. And I know that they had a fight in court, but I don't know what the outcome was. Um, yeah, volume. I just came from another live video and noticed the difference in volume. Yeah, it could be the quality of my mic. It hasn't changed since I made a few tweaks. I might even, I mean, this mic even takes a battery. So, Alex, let me know if it's changed on your end yet. And if not, I'm just going to swap out the battery and see if that makes a difference. I appreciate the input, though, Alex. You know, I'm just trying to work out the details on this, or the subtleties in streaming. Alex, testing, Alex. What's coming through, buddy? Is everybody having a problem with the sound? So this was a fairly decent run that it made. You saw 4 points, and then you know, the only value in it I see really. I mean, it would have been a 2-point run up. I don't know how much follow through it's going to have again because of the feds. Sure, it made a difference. I'm doing well. The volume is up a little bit, or should I try something else? So anyway, you could see where it's respecting yesterday's trading range, the opening range, yesterday's opening range. So I have those in yellow, and today's opening range are the green lines right there. And really, I'm just using that to demonstrate how you could use the opening range to control your trades. And normally, when there's at least 14 points between the opening range, I could trade it. You know, look for a bottoming pattern down around the low of the opening range, and then my target would be the high of the opening range, and then I would look for a topping pattern and trade it back and forth. And those are really good days because, you know, I can get 4 or 5 good trades going off with at least a 14-point move. You got about 7 points you'll pick up on an option and on a 50 delta. I can hear you well at a high volume setting. Okay, so All right, I'm just going to pause, mute this for a couple of minutes, and I'm going to swap out this battery, and let's see if I can improve the quality of the volume. So give me a brief moment. Shouldn't take too much of my intellect to unscrew this and screw a battery in. Hold on. Does that improve it any? Inverse leverage ETFs. Do I recommend? Well, I don't recommend anything because I haven't been licensed to do that since probably 2013. But I use TBT to go short bonds, if that tells you anything, particularly LABD. So, I mean, I would have to take some time to break it down to tell you how I felt about that. I mean, I could look at a chart and tell you technically what to do, but I would have to take some time to break down LEBD to. I've never invested in the vehicle myself, so yeah, you know, this isn't. I would be shooting from the hip or making something up for the matter of content. I could look at it tonight if you promise to come back and visit with me tomorrow, and I'll tell you what I think about it. I can't tell you if I recommend it or not, but I'll tell you if I would invest in it. And have I improved the quality of my sound by changing that battery? I would really like to know. Yep. Yeah, you know what? Historically, whenever I built a business, I took the business assets and I let the business build itself, and always made a practice of keeping my capital investment very minimal. And it was kind of like a game I like to play, like, you know, try to make something out of nothing. And I'm doing that actually with this channel, but I do feel that I mean the mic is just absurd that I have, and yeah, I'll probably make that move. I actually looked at some hardware equipment, and because of the shortage of semiconductors, I can't get anything delivered until like mid-July. So I have some things arranged. You're clear and loud when you're close to the mic. All right, cool, man. I appreciate that input. So I'll just stay close to the mic. It's not like I'm trading anyway. So we are doing everything we possibly can to get things going and get them right. And wait, hold on one second. Now the mic is in my face. It's all about the mic. So yeah, I'm just really enjoying doing this with everybody, and like everybody's really cool and warm, and Liz has a great smile, so I'm just going to make the investment, and yes, she'll come back tomorrow. All right, cool. So I'm going to make the investment in some equipment, and you know, just keep trying to improve the quality of the stream. So now I have this big old phallic symbol in my face, and hopefully everybody can hear me. I'm not too happy, but hopefully everybody can hear me. Did that do for us what we want it to do? I mean, it's bouncing like it's picking up background noise. Can I make adjustments on this thing? Nope, this is adjust. Oh, yes, sound. If you got a P.O. box, I'll send you your real nice mic. Got to find a way to contribute somehow. You sound great, actually. Okay, well, you know what? This is a shotgun mic, and I had it off to the side of me. And assuming, because it's a shotgun mic, it should be pointed right at me. So the positioning may be better right here. Oh, I sound marvelous. Marvelous. Let me ask you this. Do I still sound marvelous? Because I just backed it away from my face a little bit, which makes me a happy camper. But I just want to know if you can still hear me, or if you hear me better when I get real right up on it. Hey, we aim to please, Alex. Yeah, well, there's no adjustments on this mic, man. This thing is old school. And I remember buying this. I think I bought it here's a good story for you, a little corporate espionage. So this is a shotgun mic. And there was actually, when I was building my BD, there was another BD that had opened up across the alley from me. And they had a ton of guys. They were a lot bigger than me. So I got this shotgun mic to try to figure out what they were doing over there, what their moves were. Such is the industry. But, I mean, ultimately, I got bigger than them and even took over their office space. They weren't that savvy. Right up on it is great. Am I a hoarder? Nah, man, I'm a minimalist. I'm a minimalist. But, yeah, you know, like electronics and good equipment, I would hang on to. Here, look at the trading pattern of this thing. It's just bouncing between, if you look at the S&P on the 30-second, it's going between the trading ranges. So this kind of represents the theory I was talking about, which is trading in between these two trading ranges. When it comes down here, we'll start looking for a trading pattern. But it's not a trade I'll take because, you know, the spread's only 3 points. You know, on this really monster move, if you entered aggressively, there was 5 points in it, so maybe you're picking up 2.5 points on your options. So that's not really something I'm looking to do. Class is full of junk stuff. Nah, yeah, you know what? In some space that I own but not live in, where Lady Off Grid lives, there are closets full of stuff, and she's more like a hoarder. But wherever I exist, it's very clean and clear, and I like space, and I like a clear view. I don't like a lot of stuff. I mean, that's even a philosophy I use in sailing. My boats are very simple, and I can envision every system on my boat. So if I hear a noise, I know what's going on, you know, and I kind of apply that to life too. If I could see the playing field, I could figure out a way around it. So no junk. But yeah, I do have some valued pieces. But yeah, you know what? Once I replace this mic, I'm trashing it. I mean, it's doing me well right now. It's good in a pinch, but I'm trashing it. And I appreciate the offer for the mic, man. I mean, I don't know where I'll be. I need a few things. I don't even know where to have the computer equipment delivered. I don't know if I'll be on the boat or I'll be here. I mean, I want to get back on that boat. Yeah, I'm like that too, man. I don't like a lot of appliances on the countertop, and I like my appliances, but there's a place for everything, and everything is in its place. And yeah, the same. Miss Grid will, if there's a flat surface, she's going to fill it with something. So again, we're not doing much on the market. We're just kind of waiting for that Fed report. So we're just letting that grind its way out, let the markets grind its way out, and everything's really not doing anything. All I'm looking at are channels and compressions on all the markets, on all the equities. Not too crazy about that topping pattern on AMC, but again, I'm not going to pay too much attention to what's going on with equities until after the Fed decision, and I see some real trading coming into the market. There's no real trading coming into the market today. I mean, we would be taking risk to make a buck here, a buck there, kind of like yesterday where we just churned out a few dollars and then I said, to hell with it. But this does do wonders if you do income trades. You know, the time value is what you want to deteriorate, and that's what happens when the markets don't move. Yeah, I look forward to getting that information out so everybody can participate in that. Oh, yeah. I mean, I'm just looking at positions I have that are just at max profit right now. Yeah, I have a water maker, but I prefer to catch rainwater because it's reverse osmosis and it takes the minerals out of the water. So you're actually you need to supplement if you're out for a long time. You know, there's a lot of minerals in natural water that your body needs. So I prefer. Well, bull flags are tradable, man. On a 1 minute, let's take a peek for you. A market question on a market channel? What's the matter with you? Think. Yeah, well, yeah, okay. It's obviously got to close this 1 minute. There you go. And yeah, you could trade that break. You have good momentum. It's moving up. I mean, it's not that aggressive of a bull flag. It is breaking the daily high. So you know what? That's a good trade right there. I mean, you're breaking the daily high on a flag. If that flag happens, it'd be a good trade. But again, I have to say that I don't have a lot of confidence in trades and setups today because of the Fed looming. So you got to set up here too in the 2 minute. Yeah, that's a good setup though. You know, breaking that a bear flag, bull flag on the break of a daily high is a nice move. But I mean, you might see a point out of this bad boy. You know, then you're going to hit resistance at the close of this gap, and then you're going to hit resistance on what I believe is the previous day's open, perhaps. I don't really know what the purple one is. Here's the previous day's low. Or here's the previous day's low. So that might be the previous day's open. But there it goes. It just triggered. It looks like it's pushing up. And sometimes gaps are just halfway fills. But that is a good bear flag, man. And there you go. There's the execution of that bear flag. So how come you don't just follow the Russell and trade the option? It would pay off better. Well, you have to do a little pickling, and you have to service it regularly. And I know a lot of people take a little water out of their tank and then recycle it. I don't use mine that much, so that I don't really have to mess with it all that much. Oh, yeah, that's what they do. They back flush it. I see that. What time is it? So this is probably the midday reversal on the Russell right there that you're trading. And that's what the IWM is for everybody. It's an ETF on the Russell. So here I am, sitting right up on a mic, watching my trading day. Life is very interesting. Everything's just kind of making a move up right now. Everything but Amazon. Let's take another look at the SPX. There it is. Just kind of chopping around. So that's good. You made a few bucks on the Russell. But Mr. Drew, Mr. Andrew, have you ever... Oh, well, you did say you're trading the options. Are you trading the options on IWM? Or I believe the indices itself offers options. I'm just watching the market, just looking at the behavior. Oh, no. Oh, I thought I froze my charting software. I did not. What's the Fed gonna do? The question of the day. What's CNBC telling us? What's hot? I think commercials are hot. Look at that. The markets are on edge. Any indication to you guys that the markets are on edge? Oh, look at that. House Republicans zero in on big tech's relationships with China. See, I mean, this is a Cold War, man. And they're picking on the tech, too, because, I mean, obviously, that's the real strength in the economy. Hey, Finn. Slow day today, but just made a few bucks on... Oh, cool. That's very good for you. One of the most shorted stocks out there. Oh, you're a big short fan, eh? All right, good for you. That scared the crap out of me. Oh, really? You're picking up a lot of background noise? I didn't even hear what my computer did. Let's see if I could. I think I could knock that out. Yeah, it's slowly moving sideways. Yeah, like we said, it's going to be a churning day, so we're just going to do the best we can to just mitigate our exposure. But yeah, I mean, this is a Cold War. Oh, I guess they were talking about spinning off their battery unit, but they're going to keep it in-house. Or maybe they're talking about not doing outside purchases. Kathy Woods. Yeah, I'm keeping an eye on this lady. I remember Elaine Gazzarelli back in the day, who hit a few good situations and then disappeared. And I mean, I remember her specifically because she was one of the first female followed analysts back then. But analysts, time and time again, do that. They hit a few things, they get this reputation, and then they disappear. You know, guys like Bill Ackerman and stuff like that, they last. Really nothing going on in the news that's going to move the market. Everybody's just sitting around waiting on the Fed. What the Fed has to say. Yeah, we do rely on China for way too much material, and I don't understand why we don't shift that to the Philippines or to South America. I mean, we share borders with South American and um, well, Central American countries, and I mean, why aren't we shifting our manufacturing over there and help build their economies, who in turn will build our economies? They'll consume our goods, and yeah, you know, we're right there. Have happy, healthy borders, like that financially and economically savvy country, El Salvador, that's adopting cryptocurrency as a national currency, which makes sense when your cash crop is like cocaine and marijuana. Um, yeah, um, Anthony, as far as computer chips, I'm actually seeing the hurt on that right now. I'm waiting for some equipment, and because of the shortage in semiconductors, um, there's a delay in production, and it'll take me at least a month to get the equipment that I want. So yeah, that's a reality. But everybody sees the reality, and really, right now, it's Taiwan that's the major contributor of silicone chips. Problem is it's right off the coast of China. So if we're in a war with China, you know, the China Sea is inaccessible, so we won't be able to get goods. Although I think we do some silicone processing in California. But I think that's their direct intention, the government's direct intention right now, is to mitigate that kind of exposure. So if you just joined the channel, I appreciate everybody coming in. If you could subscribe, hit the bell, hit the like, it'll go a long way for the channel. and any comments you drop helps me out. So any participation or interaction obviously makes me look like a real good guy in the eyes of the YouTube gods. So we appreciate the support, and if you share the channel with other people, that's great too, man. Share it on your Facebook page and Twitter. You know, we're just trying to build a big old free folk nation. This way, nobody has to do that commute anymore or live in cities and breathe dirty air. You could just hang out and breathe in that sweet scented air out in the country and trade. I intend on teaching you some trading tactics that you can just do once a day, set it and forget it, and go about your business and just check back at the end of the day and take a look and see what the market's done. And then you can make your decision for what needs to be done for the next day. If you don't want to sit in front of a computer and listen to me all day, that's a good way to trade. And I find it advantageous too when I want to move and I'm looking for another port to drop anchor in. I could set a trade and then you know, not worry about what goes on for the day and then check back on it. So so just, yeah, you know, if you hit that bell, you'll know every time I drop one of those educational videos. My thoughts, well, wherever there's a crisis, there's an opportunity. Yeah, it probably is bringing some business to intermediaries. You know, your normal channel has broken down, so you know you're kind of sniffing around and trying to figure out where you're getting things. You get brokers and things of that nature that go to work. And I mean, obviously, we have that hoarding complex. So, yeah, you know, when we think there's a problem, people start hoarding supplies, and I'm sure that's going on. But I'm sure they'll come to a resolution, and I'm sure a lot of it is also manufactured because when there is a shortage, there's a price rise, right? So oil companies will just draw oil from the ground, store it in tankers out in the ocean, and just leave it out there. And you know, they don't even count it in their inventory, and it looks like there's a deficit of oil, and oil goes up, and it's commonly known that it's done. And yet, you know, it appears to me to be price fixing, but nobody makes a move on that kind of action, which goes to show you what good lobbying does for you. But I would imagine right now that that's what's going on in the semiconductor industry, because the resource is not limited, although you know, a lot of it is coming from Asia. They have the largest deposits of silica, but I'm sure that it was initiated by the pandemic, and now everybody just sees the benefit of it, so they're holding back a little bit. But I'm sure when everybody wants to make their Christmas money, this will ease up a little bit. Prices will remain high, but products will continue to flow. Am I completely self-financed by trading? Um, I was in finance for 20 years at the top of my game, so I don't know. I mean, as far as pocket money, yeah, it's all about trading. And what I consider pocket money is really basically my living expenses. As far as what I've done for generational wealth, I mean, I have investments and as a result of my life work. So really, my family's taken care of um, because of my life work. And if you're asking because self-financed, I mean, that does encompass me. But as far as like daily living and partying and toys and stuff like that, yeah, it's all from my trading. Um, and then anything I do long term, I kind of is designated towards my generational wealth program. And anything I do short term is kind of just the disposable income to, help me through life. But yet, my program has changed. I mean, back in the day, I was an aviator, so I had all my toys. I had my helicopters and my airplanes and my hot cars, and I flew around first class, and I stayed in the best hotels, and I did all of that. So, I mean, that's not really my program these days. So life is like very simple for me right now. So I mean, I make more than enough money to satisfy my needs now. Now I just, I like to run around my house and my property, and I like to go sailing. I do spend a ridiculous amount of money on dining and things like that when I'm with my family in that environment. But yeah, for the most part, I mean, all in all, yeah, it's about trading. And I always believed that you lived within the means of your immediate income, which wasn't a theory that's shared with my family, not my spawn and my lover, but with the family that raised me. I mean, to them, savings was a four-letter word, and they spent whatever they had. But I've always believed that you live within your income means. But thanks to trading, I mean, that's a pretty comfortable barrier. So, okay, yeah, I see your next sentence kind of clarified that statement. So, yeah, other than nest eggs, yeah, I could live, I could live extravagantly off of just my trading, if I so choose. But yeah, my investments are designated for my family and them going forward. Um, so that would be Miss Grid and my two spawn. But my income, I consider it just disposable. So, and they obviously reap the benefit of it too because I love spoiling them. But yeah, trading, man. But this is what I do for a living. You know what I'm saying? I mean, you guys are moving into this. You probably need additional streams of revenue to make money, and until it gets rocking and rolling. But like you were trained as an electrician, Anthony, and that's your career. This was my career, so it's a little. It's like I'm working. This is my job. So so yeah, it that's my income. And really, to tell you the truth, I kind of budget myself to live on my fixed income trades. The spread trades that I talk about, and which is more than comfortable. And then I consider the money I make trading as my mad money for when I want to go mad. So if I want to go, run around the country or something like that, I don't have to think twice about the expense. Yeah, and I don't think that's an intrusive question. I mean, I know you're curious as to what the lifestyle is, and yeah, that's why you do what you do. And trust me, man, this is a very stressful industry, especially when you first get going. Now, it's more comfortable for me, but yeah, high stress. Building your business, hitting your goals, and yeah, putting your money on the line all the time. Markets changing, surprises. I mean, it's crazy. As an employee or even another business, if you don't work today, you don't make money, but you could always show up tomorrow and go to work. But if you have outlining events or debacles in trading and you eat up your capital, well, there goes your business. you're out of work. And you do come into scary situations. I mean, you try to mitigate your damage, the damage, and you control your risk, but there are sometimes surprises. How about everybody who is long during the elections, not the last elections, but the prior one where Trump took office? There was one point in the evening that the S&P 500 was down 600 points. So anybody who was long futures, they were sweating. I mean, a lot of people got blown out and lost everything because as it goes down, the clearing firms are just liquidating you to cover the margin calls. If the account goes negative equity, they're going to eat that loss, and they have to chase you for it. And based on the fact that they have thousands of clients, if they eat a loss like that, that could make them negative equity, and they have to come off the box and close their doors. So a situation like that could bring down a brokerage firm. So they're as that position is dropping, they're just liquidating everybody's account. So a lot of people got banged out overnight. They woke up the next day and their accounts were at zero, or really probably 25%, because once it goes down to 25%, you got to meet that call. Or if they're a trader, if they're a professional, it could be like 10% or 1%. Depending on the deal you cut with your clearing firm. So it was an interesting day the following day. And then some people who were up watching the market and trading through that. I mean, because it went down 600 points and then turned around. So somebody caught that 600-point move and changed their lives. I remember I was sitting there watching a movie with my spawn. And I just had it up on the screen in the corner. And I just saw the drop in the move. I was like, oh, my God. Okay, well, investing and trading, obviously two different things, man. If you want to make a living investing, you have to be investing like $15 million. Because when you invest, it's long term. You have to wait for that. You do a lot of dividend investing. And, then it's just quantity. So if you're collecting, if you're aggressively chasing dividend, you can get about 5%. So on $1 million, you're talking about $50,000 a year. Which okay, some people could live like that. But you got to remember too, Uncle Sam's going to come in and glom out a big old piece of that 50,000. So what are you netting? Without a savvy accountant, you're netting maybe 34,000 a year on $1 million. And that's not considering your capital gains. And when you invest, you don't really close out your positions and take your capital gains. There are other strategies of using calls and things like that where you can generate revenue. But for the most part, you're holding your positions. Most wealthy people hold their position. That's why I laugh when the market went down when Biden said he was going to up the capital gains on equities or some other equity tax that he was recently talking about. But the truth of the matter is wealthy people don't sell their stock. They buy something, and 20 years later they still have it, and they're either generating revenue off of selling calls, covered calls, or they're generating revenue off of the dividend, and their equity keeps growing, and their net worth keeps growing when the stock goes up. So they sit on the stock. So nobody really cares that this guy's going to mess with capital gains or put some kind of transaction fee on there, because you don't transact. Or if you need some money off of it, you slide it over into margin, you take out some cash. It's you haven't closed out a position, so you get to utilize that cash, and then you return the cash, close out the margin position, or sell calls to cover the margin position over a period of time. I mean, there's so many different strategies, but like I said, investing is different from trading. Trading, you get a greater return on your investment. So I could probably see 20% on my investment monthly, consistently, on income trading, on spread trades. I mean, there are always months where things go the wrong way, but for the most part, that's what the picture looks like. So you know, if you are only trading 100,000, you could do 20,000 a month. You know, on 100,000, and you know, that's a conservative posture that you're taking in the market. You know, if you're savvy and you have good understanding, but you wouldn't dedicate your whole 100,000 to doing that, or the 100,000 shouldn't be the lion's share of your net worth. You should be diversified. Actually, the proper program is the first move you want to make is you want to take 3 months of your income and ladder them in like CDs, and you'll take 90-day CDs. So actually, you'll take the first 3 months, put it in a 30-day CD. The first month of your total, not your income. Okay, let me start again. I'm like all over the place. You want to take 3 months of your total overhead, your total cost of living, and you want to break that up into 3 pieces. And the first thing you're going to do is take 1 month of your total overhead. Oh, look at that. We're breaking lows and making lows. Down we go. Okay, let me finish my point. So you take 1 month of your entire overhead, everything that you have to pay in a month. You compile that number, and you buy one 30-day CD so that it's sitting there and you can't touch it. And then you take the second month and you buy a 60-day CD, and you take the third month and you buy a 90-day CD. And then in 30 days, you roll over that 30-day CD into a 90. And then in 60 days, you roll over that 60-day CD into a 90. And then in 90 days, you roll over that next 90-day CD into another 90. And you continue rolling over that CD, 90 days, 90 days, 90 days. So you have 3 units of 90-day CDs. And then, no matter what happens in your life, you will always know that you're 30 days away from covering your monthly nut. So it buys you 90 days. So most people can find another job or figure out a plan in 90 days. So you have 90 days of your nut. And that should be your first investment. That's where the first pile of cash you have should go, so that you've got yourself covered. And then you could start looking to get a little more aggressive. And I mean, I used to advise people to knock out their mortgage first, because for a long-term investment, back when people were paying 6%, you couldn't do that well on the market, you know, yearly, conservatively. So if you knocked out your mortgage, it's like you're paying yourself 6%. You just lowered your overhead 6%, and now you take your mortgage payments and you start investing them in long-term positions. But you know, you've just increased, I guess. You've reduced your debt. You know, your overhead debt. And the cost on your money by 6%. And so if you had a $250,000 mortgage and you had $250,000 in cash, I'd be hard pressed to find you 6% a year on that $250,000 on a conservative investment. So I used to advise my clients, say, hey, you got this loot, knock out your mortgage, you know, pay yourself. And then if you always needed it, you know, you always have access to funds, you know, by getting a line of credit or what have you against your mortgage. And then you start building your wealth after you do that. So, yeah, you know, I mean, if you could arguably say you put $12,000 a year away after knocking out that mortgage. And then when you're putting that away, you could find between 4 and 5% interest or dividend on that fund. So, you know, really, you just flip the switch. I mean, you know, if you took what you're paying out and what you're getting in, I mean, you're talking about getting almost 10% on your money, you know, by knocking out your mortgage. So, you know, I strongly recommend that to be the case. If you're in the money game, it's a different story. You know, if you're in the money game, you can find vehicles to outpace what your money's costing you, which would be the interest on your mortgage or what have you. So, so yeah, it's a different picture. But then again, now with interest rates being so low, I mean, you could outperform a mortgage anytime. I mean, if you know, if you had a $250,000 mortgage and $250,000, I could do better than you know, the 2.5% you're paying on mortgages these days. You know, just Exxon alone. I mean, At one point, I think the dividend was 6%. So anyway, that's a little money talk since the market is boring and we're not going to take trades until shot time, until the Fed. Oh, man, and we're in lunch and we didn't even take a little break. Anybody want to take 30 minutes? Yeah, why don't we take 30 minutes? We'll chill out and stretch our legs, and I'll go see if the sun is still shining, because apparently I've become a cave dweller now because I'm always inside. And for that sacrifice, everybody, please hit the like, hit the subscribe, hit the bell, and hit up the chats and talk to me a little bit, because all of that goes a long way for the channel. And we appreciate all the help we get. If you could spread the word, that's cool. Either tell everybody you got to check out this bozo on this channel, or you got to check out this smart guy on this channel. Either way, it's getting them to my channel, so I'm appreciative. So I'm going to split and probably be back about 12:45, and hopefully everybody will join me. Yeah, I tried to make a smooth ending, but I screwed up my software. All right, this is it. I'm out. Talk to you soon. All right, I'm back with what appears to be a very short break. Even my mic is not adjusted. I think I shrunk a little bit in that 45 minutes or half hour. There we go. Okay, let's see. Anybody ask me anything while I was gone? Well, there you go, Andrew. You're squeezing out a few dollars in the market. Super job. Yeah, Anthony. When I first came into the industry, and I came out of construction, I actually got a stipend, to work alongside my mentors, and I think they were giving me I think it might have been $200 a month, or was it $200 a week? I can't recall. I mean, we're talking back in the early '90s, and I mean, it didn't really do much for me. A lot of the guys around me were living on jujubes and starbursts. But, I mean, it's easier to come into a new industry when you're being subsidized. So, right now you're looking for multiple streams of revenue. If you could do, look at that, SPX is touching the bottom, and it's making a new bottom. Yeah, everything's just trading off. Probably just the lunchtime sell-off. I mean, composite's only down 26. It's really no big deal. There's really not a whole lot of moving going on over there. The Russell down 14. Yeah, really nothing going on over there. So, I mean, I'm not going to chase the nickels and dimes, man. There are big dollar trades out there waiting for me. I'm just going to wait for them to come around and make some money, mitigate the loss. A big problem a lot of young traders have is that they just overtrade, and you have your good days and your bad days. But I mean, really, you should be making your living on 3 trades a day. At the max. This way, you just minimize it to quality trades, and you reduce your risk. So that's why I just sit around on Fed days, kind of look at what the market's doing. And I see some entries, being that I'm looking at the SPX. But again, well, here's a 10-point move. That's a nice move. That's a nice move right there. I could see an interest in that. But I just can't find the confidence when the feds are out there looming. And like I said, based on my statistics and tracking the transactions, always pays off better for me to just be cool on this day and hang out with the good folks of the free folk nation. So there is my position. So anyway, I think I was saying to Anthony that it's a rough transition, and it's a hard industry, and 95% of the people fail. And people have everybody hits a little success, and you always have your shooting stars, but the characteristics of a shooting star is they burn out. So you don't want to be that guy. You want to be the slow, steady, consistent earner. And in my experience, those are the guys who make the real money. The shooting stars, I mean, I've seen them 1,000 times, and most of them are shoe salesmen by now. So you don't want to be that guy. But take your time, be patient, don't worry about it. Don't follow any promises to the promised land or any guarantees to the promised land. Don't buy the silver bullets. It's all about price action, and you hang out, learn your skill, master it on paper, and you'll make a living. In the interim, focus on streams of revenue. I mean, being the electrician, you could do side jobs. really the biggest trading opportunities in the market are between 9:30 and 11:30. And historically, I mean, that's what my workday is. You know, you got one decent trade in the afternoon, which is the breakout trade, and that's about it. And the afternoon breakout trade. And you could make a good living working until 11:30 or so, and then you know, knocking out whatever work you can find in doing electrical things after 11:30. You know, just work the afternoons, and you have multiple stream of revenue, and you know, you could just practice your trade, and then slowly you will evolve into a full-time professional trader. So don't rush it, man. Just sit back. You got the rest of your life. Today's just the first day of it. So you know, you go at it right, you go at it smart, you'll be a trader. You go at it like a cowboy, with delusions of grandeur, and you know, you end up getting blown up. So I had heard it said that most people overestimate what they could do in trading in the first year and underestimate what they can do in trading in 5 years. And you know, I see that all the time with young guys. So you don't want to be that guy, Antonio, my fellow paisan. And yeah, you know, again with the statistics, I mean, 95% of the people who enter this industry and start trading end up blowing themselves up. And yeah, you know, there's a reason for that. So 95% of the time when you hear all these people talking about all the money they're making and all the smart moves they're making, you know, try to find them in a year. Gone. So most of the things you should be learning really is just theory and setup and risk management at this point in your career. I mean, that's all there really is to it. And then you start taking trades. You know, everybody who kind of has the Join Me website, like, take this trade with me, take this trade with me. I mean, it's a shot in the dark. So let's see. I'm looking at Amazon, and as my indicator, it obviously shows me that there's light market volume. So I would assume that these markets are just falling on light volume. Nonetheless, they're falling, and we actually broke below. Oh no, we just touched below yesterday's opening range. Or actually, you know what? I got a lot of bars on this chart. Oh, here's yesterday's opening range. So this is probably a day or two before, and you can see that we're just consolidating inside of that. And we're down 11 for the day, which is no big deal. So no bloodletting here. Everybody just kind of sitting around waiting for the feds. Latanya, 1495. Boy, I hope that's not your birth year. Welcome to the channel, Latanya. Feel free to ask questions. Appreciate you joining us. And if you could hit the like, I'd be liking you right back. Oh, look at that Apple. Apple's at 130. My buddy's getting close. I had told you that a guy who used to work with me, he's trading Apple, but he ends up turning his trades into long-term. Look at you. You're an active character there, Andrew. You haven't answered my question, though. Why are you trading the IWM? It has to move a whole bunch for you to make some money, or you got to take quite a position. You're very welcome. I don't know what I did for you. Yes, I understand that you're taking bull and bear flags, but my point is that those three indices trade options, and the market moves a lot more than the ETFs do. So if you're day trading and you took an option, you would have a better return on investment. I mean, you trade whatever makes you comfortable. It's just my theory. I mean, that's basically how I do it. So, yeah, you know, I don't have to trade that much. You know, I could take 30 contracts on SPY, and you know, if I could pick up 7 ticks, I mean, obviously that's $700 30 times. But I mean, if it's working for you, then obviously you continue. Just watch your risk. It seems like you take a lot of trades, and that just opens the door for a little hurt. But maybe you sit down tonight and take a look at that and see if what I'm saying makes sense and might work out for you. Yeah, but the Russell's really been moving these past few months, and yeah, you know, being a majority growth sector, you can see a lot of action on it. Ah, you're using the options on the ETF. I understand. Okay, cool. Yeah, you could clock SPX and Russell and everything. Take out the supply and demand factor and just see the movements of the markets, which is basically what I do all day. I just focus on the SPX. But again, like I said, with the Fed out there, historically, I just don't like the patterns of the day or the follow through on this Wednesday. So I just make it a rule not to trade this day. Everybody's pretty quiet though. Did we lose Zack Attack? I'm just looking to see if there's any rumblings about the Fed out there and what's going on. Yeah, when you say been up and down, as far as your your um, your equity line is going up and down, you like go profitable, break even, lose a little money, break even, profitable, break even. Um, you might just be over trading, man. Do you keep a good trade log, Andrew? Um, well, I'll just wait for the response to that. But also those bear flags. I mean, you could look at the quality of your flags, like the one you pointed out before, that was right by the previous day's open, which is a strong resistance. And bear flag busting through a resistance, usually a good entry, makes a good move. I don't recall how far that one went. I don't think it went far because um, the market's just too choppy. But I mean, you just don't want to chase every flag and try to pick up a buck here, buck there, buck here. You want a good trading market. You want a probability stacked in your favor. You don't have to make money every day. I mean, you know, if you're pulling down 5,000 a week, you're doing all right, and you could do that in 1 or 2 trades for the week. There's nothing wrong with that, and that should really be your goal. You know, I mean, you know, you could even look for 5,000 a day, but on quality trades. So on a busy day, I might take 3 trades. I'll probably, you know, make good money in like 1 or 2 trades, and just look for quality. And really, the bigger days, I mean, if you want $100,000 days, it's really a matter of how much equity you're managing. It's not really a matter of how many trades you take. And that's what you want to do. You want to grow your income based on how much money you're managing. You don't want to keep increasing the amount of trades. So, you know, you start out with maybe 3 contracts, and then you roll maybe up to 6 or 9, and you know, you get up to 30 or 60 contracts. I usually just keep it in multiples of 3 because of how I like to harvest my profits. But that's how you grow your income. You don't grow your income by increasing your exposure and by how many trades you put on, or at least in the theory of Dave. But basically, that's what I've seen around the industry by professional traders. You know, people who have done this for a living for many, many years. You'd think it was an exciting industry, but it's not. And most of the best traders are very dry in their personality and very monotone. And it's actually a frame of mind I have to put myself in before I start to trade. Otherwise, you know, my natural personality is a very shoot from the hip, very action-packed kind of lifestyle. So I have to really mellow myself out. I basically rebuilt a part of my personality so that I can trade. I think women have the right disposition for trading because they can be very patient and calculating, and I think military folk, because they are trained to be very disciplined, and that's always a good background, you know. So they're prepared for the industry without even knowing that they prepared for it, but knowing that everybody could program themselves. So it looks like we're moving down into different zones, creating a little consolidation. We might pop down into another zone. I mean, we're only down 10 on the SPX, down 100 points on the Dow. Composite's only down 13. I think the Russell is probably the weakest market out of all of them today. That's down almost 1%, and composites down a fraction. And the Dow's not even down 0.5%. think today was more about fun than it was about trading. I don't think we really talked about many patterns or anything like that. I'm just kind of sitting around waiting for the report. Wonder what my evening, my end of the day wrap up is going to be. Nothing particular happened today. Yeah, this is a little disconcerting right here, but it could end up giving us a tail again. So if you look at this daily chart that I just popped up here, and I'm just trying to elongate the bars a little bit. So we were in a nice uptrend right here with a high, and we just broke the trend, and we're rolling over on the momentum. But again, in this 24 would be the center of that, right? No, actually, that's that indicator, right? Yeah, 200. All right, cool. We got a lot of room. We could very well make another bottom, another tail to the downside with a up body. So, you know, produce another hammer. I would like to see that. That would be encouraging. And the histogram has turned negative. And we'll watch that because if we're negative today, we go positive tomorrow. That's what you can call one red bar, and that's a good indication of an up move. If we leave on the histogram on the MACD, if we leave one bar to the downside and the next day we go positive, so we'd be positive yesterday, negative today, and then positive tomorrow, and that would be encouraging. That would tell me that there could be a very good move up. So we'll look at that bar. That's interesting. What's developing? Everybody still out there and awake with me? That lunchtime break killed our vibe, man. We were flowing and having a good time. I mean, it was 12 o'clock before we even knew it. Now the world is silent. A diverse array of characters. And the world is quiet. Let's see. There's nothing going on in the news either. I'll tell you, I'm just not paying enough attention to my body, and I could feel the difference just in the 2 weeks. I get back to the boat, I'll be a little more active. I got to get back on the water. See, I'm starting to skits out now. All part of my pathology. The markets are on edge. Oh, you gotta love that. Should I go on another rant about that? Yeah, the news hasn't even changed, man. Jeremy Siegel, he's old school. CFED's dot plot shift towards tightening. I mean, talk about captioning the obvious. Yeah, we understand that the economy's heating up, having a hard time getting employees, seeing a little inflation even after the spike fades out. They've been easing since 2007. So why wouldn't they look to tighten? People knew there was a pandemic, their pets did not. Oh, you know what? I'm not even going to delve into that. Yeah, rare unity to crack down on tech companies. Everybody wants to get paid. All right, we don't want to sound like too much the cynic. See, the problem I have with Regulation 2 is it squeezes out the smaller business because they can't absorb the cost to continue doing business under strict regulation guidelines. So it just creates an environment where only big business survives. And that's why you find a lot of business supporting some regulation. And some businesses even break rules in order to encourage regulation, to squeeze out the small guys. Nobody's chatting. Oh, there we go. Just going inside. See, these are old bars, man. These are old trend lines, just to show you the value of them. So this was yesterday's trading range, and I'm thinking, we could look back and look, but I'm pretty confident that this was the prior day's trading range. So we traded in between yesterday's trading range for quite some time, making a consolidation. Then we broke, and we're filling this trading range, and the momentum is actually moving up. So I wouldn't be surprised if we come back and test this one again. And we see what's going on over there. I mean, we could very well go the other direction, but it looks like we're just bouncing in between those two. And we're getting closer and closer to jump off point, baby. 5 minute is actually gaining strength. Anybody have any stocks you want me to look up? Any questions you want me to answer? There's just nothing going on here. Just waiting for waiting on the Fed. Oh, we didn't even look at the oil report. What went on in oil today? 10:30. There you go. Cushing's distilled. There we be, crude. Oh, look at that, man. So they were expecting a drop in supply by 5 million, and there's actually a drop in supply by 7 million. I bet if you check in the middle of the Gulf Coast, you find a couple of tankers full of oil. Probably about the 2 million you're looking for. Press conference. I'm going to have that playing in my background. Oh, wait, you know what? I'm going to have it playing in my ear because who knows what kind of restrictions YouTube will hit me with. Just waiting for this Fed talk to see how the markets will react. Yep, that's exactly it, Mr. Williams. Yep, just wait to see how the Feds react and how the market reacts. I mean, I'm not expecting any surprise, so I just think it's going to be game on after the announcement. You know, people are going to get back to business and start trading, you know, how they trade. I mean, if there's a surprise, you're going to see a major spike. Or what could happen is you could see people just trading on different words that he says, so you'll see it bounce around a little bit. And it's hard to catch those, man. That's like better algorithm trading than anything else. So I wouldn't be too aggressive trying to trade on that report. But there are report trades that you can do, and I'll show you them. The drop in crude oil, did the ransomware attack on Colonial Pipeline contribute to that? Contribute to the drop? No. Well, it was my understanding that oil was up. It was up this morning. The ransomware actually shut down the pipeline and boosted oil or gas prices, actually. And I saw it on the East Coast. And but what was funny was they were reporting that people in California were jumping online and hoarding gas. Yeah, you know, kind of like the whole toilet paper debacle that went on during the pandemic. So it's interesting because that shutdown only affected like 3 states in the southeast. And I think it was North Carolina, South Carolina, and Georgia were the only ones who got hurt by that. And that forced up prices. But again, in California, people are online at like 2, 3 in the morning getting gas. You know, funny. Those guys are wrapped a little tight over there in California. So oil today. Yeah, hey, look at that oil. Yeah, oil's down 14 cents, 71.98. I mean, these are all-time highs. I mean, we haven't seen this. Oh, man. Biden's holding the press conference. Did it start already? That's probably why the market tanked. Yo, whenever he or his press secretary, you know, just announce that they're making an announcement or having a conference, everybody gets all edgy and the market drops dramatically, and then it fades up. Yeah, I don't enjoy when he's talking. So anyway, yeah, oil looks like it's down a little bit. Nat gas is up. RBOB gas, that's like regular automobile fuel, and that's faded off. They're saying $2.15 a gallon. I don't know where the hell they're getting that. And this is household fuel right here. So that's funny. There's more consumption in gas than we thought, but it's down 15 cents. So I'll bet that the move up over the past few days was probably in anticipation of a greater consumption. Where'd you see that, Kerry? Is that on the East Coast or the West Coast? Yeah, Think or Swim. That's a pretty good platform. Um, yeah, it's funny, man. It's amazing. Like I don't really get what the toilet paper shortage was over the pandemic. I mean, you know, I mean, I don't know what they were expecting. Oh, here we go. We're testing that low and we're breaking through it. Oh, go. No, bouncing off of it. What's it going to do? The momentum's right. Probably keep pushing down. I wonder where that baby is going to end up. What kind of resistances do we have? Looks like it has the support of the composite. The Russell looks like it might be making a double bottom. Where are we going? Oh, here's where we're going. It's not even going to be a buck. It's a fairly decent move for the day right here. I mean, you got about 10 points you could have captured on that move. Oh, you saw that on the news? East Coast, yeah. Oh, you here listening? Great. Glad you're with us, Finn. Yep, yep. My view on cryptocurrency. So, I mean, you want my view as a currency or as a trading vehicle? Well, you know what? I like to talk, so I'll tell you both. First of all, as a trading vehicle, what you're looking for is momentum, and if it has momentum, it's tradable. If you know the trading patterns, that's cool. I haven't had time to really watch it to understand the manner in which it trades. So in addition to my setups, I have an understanding of the markets I trade. So I know what its character is like. I know what their personalities are like, and that's why I'll trade what I trade. I could sit there if I'm looking for volatility. I'll probably watch a cryptocurrency or a digital currency. And develop the trading patterns because it has the volatility, and that's all I need. As far as an investment, we like to say that Lincoln freed the slaves, but in reality, that was a currency war. And the reason I bring that up, it was a fight between the Union dollar and the Dixie. And the reason I bring that up is because the U.S. currency is the international currency of trade, and that's gives us a considerable amount of power as a country, and we're not willing to surrender that. We weren't back in the 1800s, and we're not now. So I could see a lot of regulation. So as far as an investment I'm talking about, I could see a lot. There's a lot that has to go on with this, and countries aren't going to allow their currency to be challenged. So I question its viability. But and also, just like back in the dot-com days, if you're old enough to remember the dot-com bubble, I mean, everybody and their brother was throwing a .com on the back of their company and making a fortune off the company. So there's going to be a lot of junk that fades away. So we still have yet to see if it does become a viable investment, what it is. But it's just it's not a tangible asset. It has the value we care to attribute to it. And if anybody loses faith in any of it for any reason, it's going to fall apart. Even gold. I mean, there's no supply and demand issue. It's probably the only asset out there in the world that there's more supply than demand, but continues to keep going up. Although it is an excellent electrical conductor and isn't subject to rust and things like that. But maybe in computers and some space equipment, that might increase the supply or the demand on gold, but off on a tangent. But you don't have any of that with cryptocurrency. It's just, we've all agreed that it has a certain price and a certain value, and people are going to buy it. And how does that hold up during a recession when all these yahoos who are actually diving into it can't do it? And, it has the support of El Salvador, but, this is the exact means of monetary transfer that people who do cyber attacks and other illicit activities can use. And the countries are working very hard to eliminate money laundering and use of funds for criminal activity. So I mean, there's a lot going on with it as far as an investment. I'm not very aggressive with it, investment-wise. And I guess there are a lot of guys out there putting away a few pieces. But you got to realize, too, that people get involved with it. Big people who have good media exposure, they get involved with it, and then they know when they let the general public know that they got involved with it, that it's going to pop it up. So, it's a form of stock promoting. And, I really frown on that. And, I forget the names just elude me, but yeah, Elon does it from time to time, and the other investor billionaire who owns a sports team, I forget his name. It's right on the tip of my tongue. So anyway, he does it, and he's been talking about it a little bit, and yet I don't think that's right, not at this point. But anyway, it's a sector that's there, and I'll watch it and I'll see what's going on. But I mean, the U.S. dollar almost fell apart during 2007, 2008. How viable do you think a cryptocurrency is going to be if we come into a financial situation like that again? And then to use it as a currency, I mean, today I can accept it for my automobile, and then it drops so much I wouldn't accept it for groceries. So it's too volatile to use as a currency. So I mean, it's a trading vehicle. It's kind of like the meme stocks. There's a lot of hype right now, and it's going to zip around. There's an old saying in business: you don't want to be the first guy in the industry, and you certainly don't want to be the last guy in the industry. So I'm just going to chill out and see what happens with it, how the governments accept it, and when it becomes a viable currency, there's plenty of upside. I don't have to be in on the ground floor. There'll be plenty of upside once it looks like, it might have a place in our world. But as another vehicle to trade, I got plenty. There's plenty of vehicles for me to trade. I don't need another. I really just focus on one. And I've said it before on the channel. Mark Cuban. Yeah. Thanks, dude. That's exactly who I'm talking about. Anyway, any professional trading desk, if they have 10 traders there, they're not all trading everything. Guys are specializing in markets. Guys specialize in oil, and some people just trade the S&P, and other guys are trading a particular currency. So like I hear from all these people who are jumping around, and hey, super job there, Andrew. I see all these guys jumping around, and trying to get involved with all these different equities, and it blows my mind. I mean, you got to know the character of it. So, to make a short story long, so anyway, if you watched it and you know the trading patterns, yeah, trade it. What the hell? I mean, the same thing you're learning here with double bottoms and reverse microtrends. I mean, it works in every market. So if you could read price action, you can make money in every single market. Mark Cuban. Yeah, he's a smart guy. But I really don't like that he's promoting his position in cryptocurrency. When you come out and just say, I own it, what does that do for the general public? I mean, you have something to say about the product, break it down, help people understand it, let them make a intelligent decision on whether that product's right for them. Otherwise it's just promoting for his own benefit. Wow, how do you capitalize it? You know what? Um, I don't think that I could have a conversation on how to capitalize it. On triple witching day, there's a lot of volatility in the price of options, and it's really something that you have to be weary of. Um, and QQQ is not really the market that I trade. There was a 5 times QQQ trading during the last event on options. So I don't really. I think you're saying that the volume increased 5 times, and that's because people are settling up their options or closing out their positions or satisfying their assignments. So yeah, there's always a spike on triple witching. So yeah, you have to be wary because the markets um, jump around. So being a probabilities kind of guy, I don't get myself involved in an arena where the probability is that I might get hurt. You know, and I certainly don't chase get rich quick ideas. Um, I love the $15,000, $20,000 days, but and I have them, but I'm not chasing them, man. I'm being very disciplined, very consistent, taking my setups and watching my downside. You know, this isn't a casino. If you're looking for the get rich quick kind of trade, it has two ends, and usually it's get rich quick, and then give it all back and then some. So yeah, you know what you're doing with the bull flag and the bear flag. I could respect that because you have a good setup, and you can put a bunch of rules around that. And all you need is volatility, and you just have to wait on a market that will do that for you. You know, and you'll find that volatility in well, you definitely find it in the composite. I just find the composite a little too whippy. So if you're putting your stops in, then you're going to get stopped out. And I kind of get the feeling, Andrew, that you take a lot of heat on your trades, and you're not really working with stops. But so anyway, that's why I avoid the composite. But just look for volatility, man. When there's volatility, then you capitalize on it. It's just like if you do go to the casino and you're at the craps table and you're hot and you know you're hitting your number, you're pressing your bets. You know, on the good days when things are good and everything's in your favor, you trade heavy. And when things aren't in your favor, you either walk away or you sample very light. So I was taking very small trades over the past few days. I'm just reading my streams here. Been taking because the market just isn't favoring good movement, so I'm just taking small tests. And on the days that I'm enthusiastic about it and I see good returns, I'm taking very big trades, and you know, I might have a few small months and then a series of real monster months. But you know, it's discipline and sticking to your rules. It's not getting in everything, chasing every move, and trying to hit home runs. You know, can we talk about the triple? Dave, I'm driving the car, listening to the city, red light. Yeah, man. Price action is everything. Price action is what the market is actually doing. So, you know, when we talk about every day, Anthony, when we talk about every day, like I'm looking at the 1 minute chart and I'm showing the SPX 500, and we could see it testing the high and low of what I believe was yesterday's trading range, opening range, and then so that move up. And then the double top, that's price action. That's the movement that the stock is making, the action in the price. And then it tests the bottom and then breaks that low. That's the action of the price, breaking that low. And then I see right here there's a bear flag, and it's the price action that creates the bear flag. So that's what price action is. It's the actual movement of the market. And everything that goes on in the world is already in that price action because it's creating that action based on everything that went on in the world. So when I say price action, I'm talking about what are we looking at on the chart, the pattern, the movement. You know, if it's going up, it's going down. That's what price action is. You know, we have all these green bars moving up. We have this little red bar that creates a consolidation. That's price action. It's just the action of the price. Okay, and the price action creates the pattern. So it creates the head and shoulders, it creates the double bottoms, it creates the bull flags and the bear flags. And you will find, and people have found, over years that certain patterns repeat itself and behave in certain ways. And that's the probabilities. Now, it's the market, and nothing's guaranteed, and you're not always going to hit it. And that's why we put our stop losses, and I say there's a price we pay to test if our hypothesis is correct, and the stop loss is the price we pay. But statistically, the probabilities stack in your favor when you're disciplined on your patterns and your price action. And that's all this is, man. This is, it's the law of large numbers. And you do enough of this trade, and you're going to net out positive. You catch it at the wrong time, you're going to lose money, lose money, lose money. You stay consistent, you lose money for 3 months, and then you start catching the winners, 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 winners. And, net, through the law of large numbers, you will end up positive, based on the statistics. And like I said, if you hold your risk reward to 2 to 1, you only have to be right 33% of the time. So, as a new trader, I mean that definitely puts the odds in your favor. You could be right 30. You do a little bit of homework, you learn some patterns. You could be right 33% of the time. You could refine your patterns. Then you don't have to worry about that 2 to 1 risk management. You could just put your risks in based on the patterns, and where the idea breaks down, and you're a little more accurate. So you don't mind, a 1-for-1 or what have you. But so that's what price action is, Anthony. And hopefully I made that clear enough for you. And don't text me while you're driving or chat with us while you're driving if you're driving. We don't want you running over any old women and squirrels. Define that works missing somewhere in there. Define for it, or is, a definition. What price action is there even a definition for price action? Yeah, it's the movement of the equity. I mean, it's that simple. It's just the movement of the price when you're looking at a chart. That's the price action. I guess if you weren't looking at the chart, if you weren't charting, you would look at the tape, and that would kind of tell you what the price action is. Mr. Andrew, I agree with that when the volume came in scale in. Thanks, Dave. See you in an hour. Got to run to a meeting. Then back for the power hour. Off-grid rocks. Hey, we appreciate the positive words. We'll see you in an hour, Andrew. Wow, this guy's trading and at work, huh? I don't know if your employer is getting 100% of your attention, unless you're self-employed, of course. So when you're back, I'm going to make sure that I ask that question. Off-grid rocks. That's pretty funny. So look at that dip in that return. What is that? Just bounces off that low. I wonder where that low was. Oh yeah, see, we said that too. It's probably going to come down and meet that, pop through it a little bit, and turned around. But okay, what was the 34 to 32? So yeah, I mean, this is the only, if you're watching my crosshair, this is the only move of the day that was really exciting, and that was like a 10-point move, But I mean, when you're looking at a day where only one move would have made you money, it's best not to take any, because we would have tried to have found a move and we would have just gotten banged out. Or like the other day, we made a buck here, a buck there, a buck here, a buck there. I mean, just too much exposure for too little. But yet when the market's trading properly, you get these 10-point moves all day long. So for you to catch 2 of them makes it really, really easy. 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 2 of them makes Any tips on reading the tape? Nah, not really. It's not really my forte. I basically trade off the chart. I know a lot of guys develop that into an art. Um, and I mean, you could see the volume, and you could see who's out there, and how the orders are going. You could do that just by watching the bid and ask. Um, but I mean, really, I'm so busy staring at the chart that I can't even monitor what's going on at the tape. But that's old school. I mean, that was kind of done back in the day, before people were really into charting. And when I came into the industry, I mean, technical analysis was kind of considered mysticism. All the old time fundamentalists used to knock it, and most traders and firms worked on fundamentals. And then slowly people started to understand how you can incorporate technicals with fundamentals. And then, in the 90s is when trading really started happening. When electronic trading started happening. I mean, because there was a time when I used to call trades into the floor, or just go right to a floor trader to execute trades and stuff like that. So you weren't able to do it like you do it now. And then shortly into my career, it started to evolve where I was executing trades right at my desk electronically, and that was only in industry. And then it became available to the general public, and that's when it got really wild and crazy. So I got a tip for you. Go find somebody who knows what they're doing with reading the tape, and study under them, because I'm just not that guy. Ah, am I risking $2 to make $1? No, that doesn't seem very prudent. No, you would risk 100 to make 200. And if you hold that risk reward ratio, Anthony, then you only have to be right 33% of the time. So if you're right 50% of the time, you're very profitable on a 2-to-1 risk reward ratio. Yeah, you bet, Nick. Hopefully I could tell you something else. And first time I'm seeing your name, so hopefully you come back and you've subscribed and hit the bell and hit the like and spread the word. Even your comment means a lot to me. It helps the channel out a lot. So, actually, that guy I was telling you about, or was talking about, who got stuck in Apple, is actually pretty good reading the tape. He just has bad risk management or self-discipline to take himself out, because he knows he should have taken himself out of the trade, and that's what he keeps texting me about, and I keep nursing him through it. So a lot of the young guys that I traded with and taught how to trade back in the day stay in touch with me, and call me, and basically to stroke their heads and hold their hands when things aren't going their way. But that guy, he's pretty good at reading the tape. And that was a skill he taught himself over the years. So, people still use it. But anything that gives you insight. Look at that. We're testing the low again and pushing down 14 for the day. And what do we got? Oh, we're just running right into the Fed. I mean, I'm going to put the news up, but I am quite certain it's going to say Feds leave interest rate alone. What's more important is we want to see how we could look at the comments, and I don't know how I'm going to do it, because sometimes I could, I'll probably keep it on in the background from CNBC. Just one of the videos that I had put up while I was chatting with you guys. I had music in the background, and apparently that's a no-no. Oh, look, I got a whole bunch of questions here. Hurrah. Thanks. This channel is great. All the questions get answered. Once it gets big, that won't be the case anymore. That's funny, Finn. No, you know what, man? I was thinking about that last night, and I don't like a delusion of the diluting of the culture, and that's something that I worked very hard against in my companies when I was growing them, to just maintain the culture and not let it get diluted, because you always have this very strong culture. Oh, look at that, there's a big move on the market here, trading off. So I was actually thinking about that last night, and I'm going to make myself accessible. If I can't do it in the chat right away, I want to do it through a venue. And I was thinking that I might even set up a Patreon account where people could get right to me, and some way that I could set it up with you guys who have supported me in the beginning, in the event that we do get that big. Always have access to me. So I might even just get a email set up and just get it to you guys somehow. So I've given that a lot of thought, man. So don't worry. I'm not going to blow up and forget who stood by me or recognized me when nobody was looking at the channel. That's important to me. And I'll have you know that I've never forgotten a friend or had a fight with a friend, and that's a very important term to me. A friend is a friend, and I've seen guys that I haven't seen for 10 or 15 years, and it's like we never missed a beat. It's like we were together the whole 10 or 15 years. So anyway, I value that. I value what you guys have done for me and what you guys are sharing with me. So it will be paid in kind. Kumbaya, my lord. Kumbaya. So anyway, if you're buying all this nonsense, hit the like, hit the subscribe, hit the bell, and hit the comments, because from what I've read, all of that helps. All that helps. Yeah. That's promoting, man. Actually, Jim Cramer. I mean, that's how he made his his persona. And I've said it before. I knew the guy back when he was trading and he was running his hedge fund, and that was his primary focus. But they had him on CNBC a few times, and the guy's out of his mind. And he actually has toned it down in years, but he was just so nuts. And I remember we used to keep CNBC on in the firm, and literally everybody would stop working just to watch him, because he'd just carry on the TV when they did interviews, and he was just so crazy. And that's what built his reputation, that persona he made. And then he created the Street, or I think it was called Word on the Street. And then when he sold it, it became the Street. So he created the Street, and then he had this little news publication that everybody participated in. And then before you know it, he was just on TV, and he stopped trading public money in hedge funds and things, and just does proprietary trades, because like the market goes down because of some economic issue, and then clients end up suing you because they lost money in the market. Like, oh, surprise, you didn't know that risk existed. So anyway, that's what the hype is all about. And then you have stock promoters and stuff like that, and they want to keep it excited. But hey, you know what? Like I've said before, the best traders I've ever traded alongside are very dry. Like, they're very boring. Their personalities are boring, and really not the type of person you would find me around. So I had to program it. Look at this market, man. It's just it just rips down, then turns around and rips up. It just doesn't make any sense. What's that move from that break? So that's a 4-point move, and then it retraces that 4-point move. What do we got? 54. Yeah, this is just in advance of the decision. Which, how do you follow that? So anyway, this should be void of emotion. So if you're looking or listening to a guy who's steeped in emotion while he's trading, and unfortunately, you may find me guilty of that from time to time, but I try to control myself. You got to question that guy, because that goes against everything that you should do on trading. I see a lot of these young guys out there, and you know, I do believe that they mean well. But I don't know who their mentors are or what their training is about, because it's contrary to whatever you'll learn if you guys joined like a trading firm and got a formal education. Amit Gupta. Is it just me, or is the volume low today? I think, I mean, is it just today? Have you been here before? Because I've heard that the volume is low. But I'm not doing anything different today that I did yesterday, unless, you know, this battery is dying out. But I'm looking at my audio output, and it's pretty strong. I've done a couple of videos, and I'm finding that to be the case too, that the audio is just not good. But I'm hearing from other people that the stream is okay and the sounds are good. The audio is good. So I'm perplexed, man. I'm perplexed. I'm actually trying to get some feedback on what's going on with my sound. But so I've been working feverishly trying to get my YouTube aspect of this up. You know, I am a professional trader. I'm not a professional YouTuber, but it looks like I'm going to be. So I'm working hard, man. I'm working hard. I actually can't even get equipment delivered because of the silicone shortage. So what's the applause, man? Now I could hear you much better. Okay, it could be the manner in which I'm speaking. I might be moving off the mic or what have you. Now I'm right up on the mic, man. So I have the interest rate decision up, and that should be rolling around about 3 minutes, and let's see what happens. And you know what? I'm going to just reduce it a little bit so we could watch the market as they make that decision. And we'll probably see a move before it happens, because the website's a little delayed on getting that information out. So anyway, I'm using. I gave you the story of the shotgun mic this morning, but I'm using this shotgun mic, and I think I have to speak right into it to get it to capture my voice. Ah, look at that. See, Anthony is my YouTube advisor. He's given me some great tips. So, yeah, it lives and breathes on the comments. So, chat it up, baby. Chat it up. Check out the videos I dropped. I did a little spiel on the feds, and you could you could like that up and share that with people. Leave some comments. Just chat it up. And I promise you, man, I will not abandon you. I'll give you a resource so that you can interact with me and still get the same value out of the channel that you got when it first got started. So I'm actually just reading a text. She's tormented on whether she should get our youngest spawn vaccinated or not. She doesn't like the idea that she's still developing and she would put these vaccines in. And it doesn't look like she'll be required by school. So anyway, that was what my pause was. So it's an interesting question. And it's about risk reward. I mean, I had issues, so I was comfortable taking the vaccine. I thought the risk was higher on me not taking it than taking it. And I believe my eldest spawn took it. But they're young, healthy, strong children. I'm sure they could develop antibodies if they get exposed. But then again, if you did the homework on the manner in which they created the vaccine, it's not a live vaccine. There's no synthetics. They stripped the proteins off that have the blueprints for the virus, and that's what they. So they're actually hijacking the blueprints of the DNA. Man, it's really impressive. Like how they go in and oh man, there you go. So this is like a knee-jerk reaction, and you could probably look for Look at that at 209. You could probably look for a bottoming pattern and play a nice rebound on this because there's I can't imagine any reason. Yeah, I mean, yeah, this is silly, man. This is just silly. So if you want to take an action-packed trade, you could look for a bottoming pattern. And actually, I'm going to jump over to a 30-minute because it'll demonstrate it better for us where to take it. I mean, they're leaving it alone, and nothing has been said, so there's really no rhyme or reason to this sell-off. I mean, so I would look for a value trade on this. And if you look at this lower sector, it's just showing me that this lower graph down here in the color, it's just oh, look at that gap down too. It's just showing me that that the trade is it's oversold, aggressively oversold. Wow, we're down 42. Look at that son of a gun. This baby's going to bounce back, though. I'm very confident. There might be a trade in this. 30-minute. Okay. Damn. I was wondering why I couldn't get any patterns. See, this is what happens when you do. Oh, look at that. There's a hammer. You could take a break of that hammer. It looked like it popped off and traded back. And look at that gap. It's going to fill that gap. I think I'm going to give this one a shot. Oh, trying to get in. Oh. Oh. I don't like that. And they don't have Social Security. Okay, they filled that gap. Now we just need to start that push up. I'm going to take a third off right here. I'm going to say halfway on that trace is another third. At that 50% mark, I'm taking another third off. I'm setting it right now. I'm going to take it right here. And I'm hit. So I got 2/3 off. So I'm leaving the last third, and I got it at a break even. This is a nice move, man. I'm picked up. I picked up 2 sticks there, and I picked up about 4 sticks right there. A stick is $1, and I'm at a break even. Hopefully this is not erratic and it whacks me out. Actually, I'm going to just move up a little bit, cover my ticket charges and my cost of doing business, and I'm going to hang on to those those 6 sticks. 6 sticks, baby. Come on, move up, move up, move up. My goal right now is that 61.8%. And the momentum is moving right, and I'm encouraged about that. The 1 minute's rolling over, but they look vicarious. There's no patterns on the 1 minute that'll tell me to keep rolling, and the 2 minutes very negative. So the reason I was encouraged enough to take this trade is that it really didn't make sense that this market tanked like that. So there was going to be some retrace. And it was just very aggressive. So I looked for the right pattern and the movement, and you could see the hammer, and then it was good enough to trade back right here and just show me that curve. So I got in, and I got a little nervous because it pulled back here, but my stop was down here, so I had enough room. And now I'm just one off at a little bit higher than a break even. I'm actually and I'm probably going to get stopped out. That was aggressive, that move down. So I got 2 off, 2 units off. And like I said, I trade in units of 3. So you could do 3 contracts, 1, 1, and 1. Whatever your comfort level is. Yeah. I love when that happens, man. I'm not out. No. Go the other way. Okay. Going the other way. We'll take that. See, that's what I shouldn't do. That's the emotional part that I shouldn't do. I mean, I should be, if I'm up 20 grand to down 20 grand, you shouldn't be able to tell the difference from my voice. And that's professionalism. But there's no reason why you can't have a little fun, too. I mean, now I have nothing to lose. I'm in a riskless trade. I've banked some money, and now I'm just going to see if it's going to be a sick trade. Because if this baby goes back to 36 from 11, man, you're talking about 25 points. I'm going to pick up 12 points. That's $1,200 a contract. That's sweet. So why can't you enjoy that a little bit? Just don't tell my mentors. And some of them are rolling in their graves. So I'm in a sweet trade. I banked the money. I'm running riskless, and I have Stevie Ray Vaughan playing Tin Can Alley in my ear. Does life get any sweeter than that? Oh, there you go. Go, baby, go. Go, baby, go. Okay, that's my target, but I'm just going to move my stop up because I have a strange feeling that, oh, don't knock me out early. I want to preserve some of this profit, but I have a strange feeling that this thing's retracing all the way. Oh, this is a killer trade, man. I'm moving up under here. Hopefully I'm not squeezing it too tight. Sometimes I do that because I'm greedy and I want the money. But there she goes. She's moving up. Go. Okay, stop cheering. Everybody calm down. It's no big deal. It's just what we do for a living. Stop making me emotional. Yeah. Yeah. You know what? As soon as it dropped down, I should have had that fib done. Tommy. I mean, that's what I'm doing when I'm trading. I'm just watching the market, moving my fibs, putting in my my lines, and looking for my patterns. You know, I'm still working out being an announcer and a trader. So, yeah, you know, my flow is kind of hung up. But yeah, so I have my fib on a hotkey. So I could just hit a hotkey and I could get right to it and make my fib. And I have my ray and my horizontal lines on a hotkey also. So I could just hit a hotkey and I could you know, draw a trend line or put a horizontal support or resistance in and move quickly. Because, you know, obviously I'm trading off the 30 and off the 30-second chart and life's pretty quick off the 30-second chart. All right, man. Am I getting too greedy if I hit that 76? Do I try to make this a 100% retrace move? Yeah, you know, I'm looking mighty peachy right now. You know, just off the top of my head, I'm in this thing at 11. It's at 26. We're talking about 15 points in half. So that's I'm like 750 on my last third. 750 a contract on my last third. Well, actually, I'm holding at 21, so I'm 10. 20. Oh wait, am I doing my math right? 11. Yeah, 10 5. So I'll be at 500 a contract if it whacks me out right here. Come on, push up. Hey, I used to trade with this dude. He was an Indian guy. His name was Nick, and he was out of his mind, man, absolutely out of his mind. And he came into the industry probably around the same time I came into the industry, and he worked as a telemarketer selling newspapers, and his best pitch was, come on, man, it's for the kids. And he always got sales like that. I mean, I wasn't there for that. That's just the story he shared with me. But, yeah, you know, that's the kind of personality he was. He was just crazy at the desk. And forget about it. Emotion, that's it, man. Oh, looks like I'm getting whacked out. Looks like it's building a little head and shoulders right here. I'm going to hold that stop, though, and just give it room. And maybe it'll run. I'd like to see that 100%. So anyway, back to Nicky. Nobody really liked him at the firm because he was so aggressive. He was so intimidating. But he and I just hit it off. I just found him very funny. And, yeah, you know, I mean, he was ranking on everybody all the time. But, yeah, you know, I know who I am, so I can enjoy a good joke even at my expense. I mean, you know if this guy's up for the day or down for the day because he's so vocal. But he used to take his shoe off and hit the chart to try to make the chart go up. But not like bang on the side of the chart. He would like hit in an upward direction where the price is ticking to try to make the price go up. And he genuinely believed he was effective. You know, just crazy, crazy guy. Very funny guy. Oh, and I'm out. All right, cool, man. I made 500 contract on my last third. And then stacked it, so it was good money. I made about $1.50, and then like 2.5, and then the 5 ticks. I mean, this is off the top of my head. I mean, I think I told you guys time and time again, I don't look at my trading profit and loss because it just screws up my head and my decisions suck. So what a shame, man. Can't be greedy, right? It was a good run. And we made money. I would have liked to seen 100%er. That would have been pretty cool. That would have really paid. Look, and it's probably going to do it without me. But we're not going to bitch about that. So there we go. We sat around all day. We were very patient. We looked for a quality setup, something that made sense, something where probabilities were stacked in our favor. And depending on your size, hey, you could make more money in that trade than most people make in a year. And the clearing firm is bitching because they only got 2 ticket charges. Well, I guess they got 3. 1 on the way in, and then I guess 3 on the way out. So they got 4. They did well. Although I think they charge per contract, right? That's what the deal is. So I guess it was... it would have equaled the same if I closed it out in 1 trade or if I closed it out in 3. So, poor clearing firm. Yeah, you did mention that before, Ant. Thanks for pointing it out again. I'm sure everybody's glad to hear you have a Napoleonics complex. So what's your point, man? Your sister and brother are tall. You're short. But I bet you have a big heart, and that's what counts. Oh, okay. I actually, in reading back on your chat, I see what you were getting at, just the vaccines and everything like that. Oh, yeah, the mood has definitely changed for me, man. I'm always happier after I've made money. What'd I do with my water? Ugh. Cool. Thank you, Fed. So what do you think, man? The press conference is going to start in a half hour. What time is it? I've lost track. Oh, we're only 14 minutes into the hour. That's cool. So I hope everybody watched that trade that I took and maybe did some paper trading. Hey, Dave, can you look at BAC? Is that Bank of America? The symbol looks familiar. I think I have a position in that. What do you want me to look at? Like a daily? AC. Wow. Did that load up? Hey, you remember back in the day when it used to take forever for my charts to load up? Yeah. All right, I don't know what yeah is. Yo, this baby is moving. Well, really moving based on the interest rates. So traded off a little bit. We could see this is a daily chart, and the momentum on the daily chart is down. So there's not a whole bunch to tell you. It's just still down. And it looks like it's making bottoming tails, which means everybody isn't too encouraged to trade this thing down. I mean, we can't really decide what today holds, but it's obviously moving because it's affected by the interest rates. Yeah. Not because of what the Fed is going to say, but it's moving around because there's volatility in financials when interest rate announcements come out. And that's the sector that's most hit when they make announcements. This is actually a nice bar that it's building, but we have the rest of the day. It's got to close. We can't really determine what that bar is. So that's what it is. There's just volatility in bank stocks, and it's jumping around based on that. But we can't really, we're not anticipating anything, any surprises out of the Feds. The Fed's going to say, we're looking at the economy, we're looking at heating, we're trying to figure out a way to taper off our asset purchases when it's time to do that in a manner that isn't going to hurt the economy. And that's basically what I'm expecting out of them. I think that's what everybody's expecting because, they're very, very considerate of the effect that their decisions have on the stock market. And again, this is a matter of national security. So everybody is in cahoots on this. I mean, the Treasury, the National Defense, and the Feds, I mean, we all understand that a strong economy is the key to a free world right now. Where a nuclear arsenal was the key to the free world. Now it's a strong economy. And even China's got rhetoric about building up their nuclear capability. But, what's the point? You only need one. Oh, look at that baby. Building a nice strong bar on the 60-minute. And what do we got left to the hour? Well, you got 45 minutes left on that bar, so you can't really count it. But right here, we're looking at a down bar. This is a 60-minute chart, and this is a good, strong, engulfing bar. If it closes up like this, it's an indication that this baby's going to keep moving up. So anyway, the volatility, yes, is because of the Fed announcement. And, the sell-off's not that aggressive. But with rising interest rates, I mean, banks are making more money on loans. It costs them on borrowing money. This is a good move for a 60-minute bar too. So you could see that the momentum has turned over here, although it looks a little erratic right here. But again, that's due to the announcement or the Fed decision. Due to the fact that the Fed decision was coming out. It has nothing to do with the decision because the decision was that they're not going to do anything on interest rates, which everybody expected. So I don't know what your question is. I mean, that's what I looked at. Do you think BAC shot? Yeah. So all of this movement was because today is Fed decision day. But that's a handsome looking bar right there. But you still have about 40 minutes left to that bar before you could decide on what it is. So if you want the flavor for the rest of the day, wait for that bar to close today. And not today. Wait for that 60-minute bar to close and have a look at it. And it will tell you what it's all about. If it closes back down and there's a big tail, then that's it's looking to fall apart. But if you think about it, bring it up to me later in the day and we'll take another peek at it and see what it's all about. What's it all about? Anybody paper trade that trade I did with me? It was fun. Look at the sell-off, though, man. That doesn't make sense. Oh, you know what it is, really? They're just waiting to hear what old Fetty has to say. I mean, you could argue that there's a divergence. It's just too long for me to take advantage of. And then when something rips up this far, I mean, if it goes beyond 33, you can't call it a double bottom. You know, if it makes a retrace up beyond the 33% mark, I wouldn't say that it's a double bottom. So now I'm going to wait to see what it does over here. It could break and keep going, but if I'm looking for a bottom, I want to see it hit it, bounce up, and test it again. I mean, it's obviously a viable pivot point. If it bounces off of it one more time, it's a viable support. And then I can see how I play it. If I even bother. I mean, I'm not going to bother to play it. The only reason why I took that other trade was because that it just didn't make sense that it sold off like that. And I knew it was going to do a nice retrace. But I didn't just get in. I mean, I found a pattern that would confirm that I'm right. And a hammer like that is a good confirmation that I'm correct. And then it actually even gave me a little gift. Like it did the break, and I was a little late to get in. I didn't get in. And then it pulled back a little bit and then came back up. And it was showing me the turn here. So I took the break. I got in nice and cheap, too, because of the pullback. Yeah, they eat grass. Yeah, yeah. I believe that our nutrition plays a lot. Yeah, you know, and everybody carries on. I'm actually responding to the conversation Anthony's having in the car all by himself. Um, um, Everybody talks about how we raised the life expectancy, the average life expectancy, how it keeps going up. But the reality is that we've reduced infant mortality, and that's why the life expectancy rate keeps climbing. And Socrates and his contemporaries died in their mid to late 80s. And back in the day, the number one cause of death to a man 45 and under was blunt trauma. So you know, basically, you're getting run down by bison, or you're getting eaten by tigers, or you're getting hit in the head by an adversary. So yeah, you know, that was the number one cause of death back in the day. People weren't dropping dead at 40, 50 years old out of bad health. You know, it was an axe to the face. So so in essence, if you made it past 10 years old, back around Socrates' time, you had a very good chance of living to 87. Your chances were even better if you ran fast and people couldn't catch you and hit you in the head. So, you know, this hype that our medical industry keeps pumping us is really ridiculous. So, and they keep coming up or finding that a lot of the things they're doing for us has a long-term ramification. And I'm quite confident that statins will be linked to Alzheimer's if it hasn't already. Just my personal experience with them, I had found that it hurt my my short-term memory and inhibited my ability to do math in my head. And then if you study, you know, the body and what cholesterol is all about, I mean, it actually feeds your brain. And when they give you a statin, they're inhibiting the natural cholesterol that your liver's making, and it does nothing to reduce the cholesterol in the blood from what you've consumed. And then you find that cholesterol isn't what's clogging your arteries. It's what's oxidizing the cholesterol that clogs your arteries. So any toxins you're taking in. And a lot of the toxins have to do with the garbage in processed foods. Not to mention, I mean, like pollutants from automobiles, smoking, drugs, things like that, that do it, you know. But hey, some oxidants are worth having. Oxidizers, rather, are worth having. I wish I could reach the top shelf. So do you understand correctly that what you just did, so do I understand correctly what you just did with the trade is the way you trade? Do you trade mainly S&P? Okay. Yes, Finn, that is how I trade. This is actually a pattern I look for. Okay. Now, this is a single pattern, a single bottom, and it's not something that I historically take. Okay. But what it did was it made this hammer. And that hammer is always a good indication that there's a trend reversal. And then I follow where my cursor is. That's the MACD, or as we like to call it here at the Free Folk Nation, that's the Mac Daddy. And I try to, take a trade when the Mac Daddy turns. So normally I'll look for a double bottom. So what you would see is, let me see if I can move this over and I just don't want you to look at the right side. So what I would look for is what you see right here, normally how I trade. So here you have this move down, you have this low here, and now you could see I made a higher low, right? And my momentum is shifting to the upside. So that would give me an indication that the trend is reversing and it's going to move the other way. And I would create my Fibonacci, and and my Fibonacci kind of controls my targets. And there are other things like EMAs, and I use the Ichimoto cloud just for targets. I don't use any indicators for entry. So this is a pattern that I look for. And conservatively, you can enter this trade right here at the 42.19.87, because in theory, if the trend is changing, it makes this low, and then it makes this high, which is a lower high. It's lower than the high over here, and you should be following my crosshairs. So it makes this lower high, and then it makes this higher low, and this low is higher than this low, so that's a higher low. And to begin an uptrend, theoretically, it has to make a higher high. So an aggressive entry, I would enter right here, which I usually take the aggressive entries, at 21.15, and I put my stop down here at 22.11, because in theory it should move straight up and make another high, and not create a lower low. So if it turns around and creates a lower low, then my hypotheses didn't work, and the price for that was the 4 points, or 2 points, because I trade options. So that's just one of the patterns that I look for. And then there are bearish divergence and bullish divergence and a few other patterns that are easily identifiable, very effective, and I'll trade that. And I'll do that in correlation with, this is a 30-second chart that I enter my trades with. But I'm also looking at like a 1-minute chart and a 2-minute chart. And I'm watching the momentum on these charts. Like this momentum right here is telling me that this is still negative, although we just broke and made a higher high. So this right here, if you're following my cursor, this is a downtrend in my momentum. But now we're making a higher high. So it's telling me that we're entering a consolidation right here. And I think I covered consolidation in one of in my very first training video. So I use multiple charts to kind of figure out what's going on. I use higher frame charts to get my bias for the day. The reason I took this trade is that this very aggressive move down on the Fed announcement, because of the Fed announcement, when the Fed did exactly what everybody did, I knew this was just a knee-jerk reaction or an algorithm reaction to some verbiage that came out or something like that. So I looked for this trading pattern. I looked for this hammer. This is a really good-looking hammer. Look at that long tail with that green body. I mean, that's everything you want to see in a hammer. And my decision was to take that break. So hopefully that clarifies why I did that trade. And if you're new here and you like what you're hearing, hit the like, hit the bell, hit the subscribe, in that order. Throw me a few chats. It helps out the website. If you want to drop a few dollars on the Free Folk Nation so we could develop this channel, there is a very cheesy Cash App link that apparently nobody uses. So if anybody advises you to use Cash App, poke them in the eye. So Finn, little feedback, man. Did I make that clear? Do you understand why I took that trade? And yeah, so the general philosophies will be consistent, or like the rules are consistent, but the patterns that I trade are a little different, and there aren't many patterns. Maybe a handful of patterns that I'll trade. And yes, I usually do it in the S&P. I could do it in Amazon or Tesla. I just like to do it where the market goes. But for the most part, you'll probably see me take S&P trades. And especially now that I'm captioning my trades, I can't really focus on all the markets and catch everything. So I'm even more conservative than normal. And then in addition to that, I do these very conservative income trades that I do large size. So I'm not pressured to take a directional trade. And those trades kind of mature every day. And I do about 3 a week, and that's just steady income. And I'm going to teach everybody how to do that. They're just, complex, and you have to set them up right. And if you set them up right, it's very conservative. And as long as you have a good understanding, and then you could decide if that's right for you and fits into your risk profile. So no financial advice here, but plenty of examples of how I trade and what I like to trade for myself, and you can decide if what I'm doing is good for you, and that's the best way to do it. And you should actually, whenever you enter a new market or use a new asset class or a new strategy, do it paper, man. Do it paper until it flows out of you, like it's just a reaction. Like I wasn't even talking about a trade when I saw that, and I said, I think I'm taking that, and it just, I didn't look for it. It called me, and that's what a good trade is. It's got to call you. Yes, it seems you know what you are doing. Personally, I'm still quite confused with all the charts, but eventually I'll get there. Yeah, you know what? You keep looking at it and keep looking at it and keep looking at it, and then one day it just clicks. So don't get frustrated by it, and don't force the issue. Just lay back and let it come to you. Just be persistent, keep looking at it, and let it come to you. And it will all come to you. It's like learning a language, and all of a sudden, it's just you just have clarity, and that's what you want. You want that clarity, and you don't trade by a gut feeling. You train your eye to read the markets. And then what you're reading becomes your gut feeling. Like it's, when I look at the chart and see the right pattern, it's like looking at a word. I don't have to sit there and break it down and read every letter to read the word. I just recognize the word, and that's what it's like looking at the chart. And that's what it'll be like for you. It's just repetition. It's like anything else. The more you do it, the better you get at it. It seems like I know what I'm doing. Yeah, well, that or I've got myself pretty fooled. But hey, it's steak tonight, so I must know what I'm doing. Yeah, eventually you'll get there. And, I've said it before. Don't overestimate what you can do trading in your first year, but don't underestimate what your capabilities are over 5 years. It's life-changing. It's absolutely life-changing. Yeah, but that's investing. And what I'm doing here with you right now is I'm trading. And, that's the mad money. That's, the overhead and everything. But investing is generational wealth kind of concept. So, sure, I have lots of different types of positions. And I do a lot of dividend investing, and that stuff's all long-term. And unless they bail on their dividend, like I just got out of my AT&T position, and they were paying a nice, handsome dividend, and that was the deal, man. That's what the CEO said, and that's why I got involved with the company. And then they just did that recent acquisition, and they're going to cut the dividend, I think they said. And I'm in that stock for the dividend, so I got out of it. And I actually did very well. My timing was impeccable. Yeah, I do that, and then yeah, fixed income kind of trades and things like that, and then I do hard investing too. In actual physical businesses. I try not to do that too much because I like the off-the-grid lifestyle, and that kind of drags me back into the world. But that's the purpose of this channel, to teach you how to trade from anywhere in the world, teach you how to trade so that you can do it from anywhere in the world. And with the help of Starlink, man, I could be doing this in the middle of the Pacific, and I could sit for hours on my deck and just meditate on that thought. Yeah, that I could be in the middle of the Pacific trading in my cabin and let my self-steer wind vane steer the boat, and I could just hang out scantily clad making trades. And if the stream's enough, I'll be talking to you. If the bandwidth is big enough, I'll be talking to you. But if you're enjoying Rhetoric with Dave, do me a favor and subscribe and hit the bell so you know when I'm dropping stuff on the channel, and hit the like, because you gotta like it. And the comments are really great. So even if you're listening to one of my trading videos or my end of the day wrap-ups or my explanation on the Fed, do me a favor and throw some comments in there, because apparently YouTube values those, and they'll take better care of the channel if we do that. Fed must be speaking, man, because I'm looking at Amazon pushing down. Russell turned negative. And the Dow. The Dow took a nosedive, man. The Dow's down like 300 points. Now things are getting interesting. I mean, we're almost down 1% on the Dow and the composite. And SPX also almost down 1%, down about 30 points. That's a little unfortunate. Yeah, puts are getting very aggressive, too. The pricing on puts. Can't find my mouse. Where the heck are you, Nicey? Oh, there you go. Yeah, hopefully this doesn't get too bloody. But, I mean, what could he possibly be saying? Anybody getting him up on a stream or anything like that? I'm going to see if I can. Don't follow. Live updates. There you go.
Market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. As is evident in the SEP, many participants forecast that these favorable economic conditions will be met somewhat sooner than previously projected. The median projection for the appropriate level of the federal funds rate now lies above the effective lower bound in 2023. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a couple of years from now. More important than any forecast is the fact that whenever liftoff comes, policy will remain highly accommodative. Reaching the conditions for liftoff will mainly signal that the recovery is strong and no longer requires holding rates near zero. In addition, we are continuing to increase our holdings of Treasury securities by at least $80 billion per month, and of agency mortgage-backed securities by at least $40 billion per month, until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since March 2020 has materially eased financial conditions and is providing substantial support to the economy. At our meeting that concluded earlier today, the committee had a discussion on the progress made toward our goals since the committee adopted its asset purchase guidance last December. While reaching the standard of substantial further progress is still a ways off, participants expect that progress will continue. In coming meetings, the committee will continue to assess the economy's progress toward our goals. As we have said, we will provide advance notice before announcing any decision to make changes to our purchases.
All right, cool.
On a final note, we made a technical adjustment today to the Federal Reserve's administered rates. The IOER and overnight RRP rates were adjusted upward by 5 basis points, in order to keep the federal funds rate well within the target range and to support smooth functioning in money markets. This technical adjustment has no bearing on the appropriate path for the federal funds rate or stance of monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery. Thank you. I look forward to your questions.
Okay, and he just closed with the stay accommodating.
First, we'll go to Rachel Siegel, The Washington Post.
Thank you, Michelle.
Oh, is the
Michelle, and
Fed
thank you,
coming
Chair
through
Powell,
on
for
the,
taking our
radio?
questions.
On the,
I'm wondering if you can walk us through expectations.
Ah, that's funny. I didn't realize I was transmitting the Fed. I thought that was just coming through my headphones. So anyway, I was just repeating what he said. So if you couldn't hear me, that's fine. But basically, he said that he's going to be accommodative until they're confident the recovery's strong. When the recovery's strong, they're going to make announcements well in advance before they change their policy. They're going to give everybody a heads up. So yeah, same. Yeah, nothing new, and we understood that, and that's always been their position, that they are very transparent and let us know what's going on before they make the move. So wait, let me just point out real quickly. If you look, hey Finn, this is for you. If you look, here's another hammer. Not very good quality. Didn't even talk about taking it. And it popped and turned around, came down. The momentum was just too aggressively going down. It was a red body, which is a subtle indication. If it's a green body, it means it closed up. Red body, it closed down. It's still a hammer, but not a great quality. No big move to reverse, right? A hammer is a reversal pattern, but you want to see a nice big move that's going to reverse. So, if you can envision what the last hammer looked like and what this hammer looked like, you could see why one would not take that hammer. So that's what we're looking for, quality setups. And you'll get accustomed to seeing what a quality setup is. So anyway, back to the Fed. Now we're just going to get into sensationalism. Everybody's going to try to read between the lines and, figure out what is really going on. But the interesting thing about conspiracy is a lot of people have to be involved. So likely that the guy's just telling us exactly what he's thinking. And there's really no need to drill down into it that much. That's basically how I'm going to look at it. For my income trades, I think I'm in a fairly decent position, so I'm not too worried. Doesn't look like the market's hemorrhaging. And the nature of the market has been that there's a buy-in towards the end of the day. So once he stops speaking, I would like to see this baby push up and give us a nice long tail to the downside. But this is a fairly aggressive move. But we're not quite down 1% yet. This trend line is probably off a 60 chart, so I wouldn't really respect it. But this horizontal line right here is a good resistance line. And this is a Keltner channel. And this midline would probably demonstrate a good support line. And coincidentally, they're both meeting right there. So that's a very strong and important support. And this, I believe, is my 50-day moving average right here. And that's a pretty far out support. We'd have to get another 30-point move. That would have to be a 60-point move for today, which is very, very aggressive. In the current climate, 42 points is a pretty aggressive move. A long tail to the downside would tell us that the buying pressure is on, that the bulls have stepped back in and pushed. The bears are making this fight to the downside, trying to get the market to move down. But The bulls reject it, got in, saw good value, and pushed the bar up. So that's what a tail to the downside is telling you. And hopefully we see that. Right here, if you're following my cursor, you see a tail to the upside, kind of an indication that the bears consider this overvalued, and they pushed it down. And some of the bulls might have considered it overvalued and sold their longs. And then subsequently, you could see the market had pulled down a little bit. And then, here's a nice bar and indicating a move up. So this is a good test. And really, I mean, he's talking. He hasn't said any surprises. There's really nothing going on that could change the picture. So this move, in my opinion, is overdone, right? So now, considering that it's overdone, we could look for the reversal. I mean, it may very well continue going. It just broke what I considered a good daily support. But you know what? With this move up, healthy retracement, from here, healthy retracement. We could even fib this out and see what we're looking at. I would take this pivot low right here, right up to there, boom, and yeah, look what we did. I mean, we could even, we hit that 23, which we could even say that this could still build a double top. The 41.49 is a 55%. So the 41.50 is a 50% retracement of this move up. So this market is real healthy, even if it pulls down to the 41.59 point. I mean, I don't want to see that, but it's healthy. It's healthy, and I'm safe. So, I mean, it could logically do that. It doesn't seem like it's still getting aggressive. It seems like it's kind of tapering off. And I don't know how long he's going to be talking. He's taking questions now. I think I might have closed it. Yeah, I did close it because it was interrupting our stream. Actually, I'm going to put it on my other computer. But once he stops talking, then we'll see where everybody's heading. Yeah, I see I had the desktop audio in there. Your microphone output volume is much lower than, say, your computer system volume. Yeah, I'm just going to take that resource off of the software so that next time it doesn't transmit that. I just noticed over here that I have the desktop audio on. I actually could have hit the mute. I didn't realize it was transmitting. Trying to get it up. I mean, it's just going to be a series of ridiculous questions from politicians who have no understanding of the economy, and then they'll ask them a lot of questions about equality of wealth and all that stuff that is really irrelevant. And then they get into the racial divide and everything. It's just soapboxing. I mean, this is a financial environment, and it just doesn't make sense what they're talking about, or bringing that topic up. In the middle of financial news. We're talking about the economy. So you might hear a little murmuring in the background. That's going to be the Fed. Hopefully all this doesn't give me those copyright restrictions. I had that happen on one of the videos. I had music in the background. And then I looked back and they put a copyright restriction on me. Oh, I think yeah, now there's doing this. I might be behind because I stopped it and started streaming again. But if anybody has questions or anything, and really it looks like the market has just dried up right here. On the 5-minute, it looks like we made a double bottom, although it still seems bearish. So let me close this bad boy out, and hopefully we're looking at a big tail at the end of the day. And that tail would give us a bias for tomorrow. And a nice tail, there should be some good opportunities to trade tomorrow. Hopefully we do well. We did very well today. That was a good trade that we took today. Oh, I have Sound of Music by Disturbed in my ear. I love that song. Great rendition. Simon and Garfunkel were pretty cool with it, but this guy was just amazing rendition. So here's my 5-minute, and here's my double bottom, but you could see the momentum is still moving down pretty aggressively. But it's rejecting this low. It's not looking to make a new low, which is encouraging. On the 30-minute, you could see that it did that reversal pattern, right? But in order for it to happen, this has got to push up. So if we did take that, we would take our entry here, if we took the aggressive entry, with a stop down here, which is less than half a buck, which is beautiful. You're talking about $25 a contract. And it did this push up, but hasn't broken this high. So on this move up, you would move your stop to your break even, and now you're in a riskless trade, and you say, okay, let's see what happened. I didn't take this trade. I wasn't watching. I was busy gabbing and enjoying the sound of my own voice. But this, I mean, this is the manner in which you could trade and not hurt yourself and test your theories. So it's edging its way back up. It would have been a good trade. I mean, look, we're already up 5 sticks. And I'd probably take my first off right there. And I would do that because it's testing this resistance right here. You know, if I was trading, I would be setting up these bars and these lines and say, okay, this is where I'm taking my first one off. And, you know, I have a stop loss at a break even on my other two. I actually probably would have moved my stop loss up here. Might be a little too tight on the squeeze. Yeah, I think I probably would play that with a break even stop loss and give it an opportunity to try to make a move and break that high. And that resistance, and it tested it 3 times, so I'm pretty comfortable that if it gets up there and tests it again, it's going to bust through it. Conservatively, that could be your entry too on that breakthrough. And I'm just talking through how you would trade this pattern. I didn't take the opportunity to get into that. You guys having fun with me? If you are, throw me a like and some comments. Spread the word. Oh, looks like it's making that move. Come on. Momentum is doing what it's got to do. I like the momentum on the 1 minute. There's the pop throw. Should keep crawling. Should keep running. Let's expand this to see what our next goal could be. What are these fib lines right here? Yeah, we could still trade these fibs. I would be bringing my stop up over here now, and I think the 38 I'll probably take a second off if I was trading this. That's cool. Could be building a bear flag. That bar's got to close for us to consider it. We have 18 seconds before that bar closes. Hopefully it doesn't retrace too aggressively. Go, baby, go, baby, go. Come on. Now, yeah, we've creating the bear flag. If it breaks the high, you could be out of your second third at 38. The first third I would have taken at this resistance right here. Oh, it just broke and traded back. I don't like the look of that. So now I would move my stop right here because that flag is going to fail if it trades down like that, and that flag just failed. So it could turn around, and there it is. Boom. I would have been stopped out on my third piece, but still would have been a money trade because my first my entry would be at 6. I would have taken my first piece off at 11, and then the other two pieces would have came off at 13. But you could see the bear flag triggers, and then if it breaks below the low of the flag, it becomes a bearish. The bull flag triggers, I'm sorry, and then it becomes a bearish move on that. So yeah, you know, that's just reading the market, man. And what I just called out to you on that is price action. That's what the price action did. The price action created the bear flag, triggered the bear flag, and the price action negated the bear flag and traded back. And then, you know, these things happen right here, which it's just, it would have knocked me out and then continued running. But, yeah, you know, you hold to your disciplines. I mean, you know, a failed bear flag and that baby can continue running. And boom, there goes the 38. And see, that's it. Could be an exhaustion gap. Or it could be halfway between the move. You know, gaps are interesting like that. But it looks like they filled the gap. So it might be an exhaustion gap, which is a little more than you need to know. So I'm just showing off. All right, so anybody with me and follow me on that trade, got any questions? I'm happy to answer them. Yeah, we didn't take that trade, or I didn't take that trade, but that's how I would have traded. I didn't take it because I was talking while it was setting up, and I didn't see the setup. But, yeah, you know, Powell's still talking. Federal Chairman Powell. I wonder who they're going to replace him with if they replace him. I can't even hear the questions. I'm really not interested. They never ask anything of value. I mean, that's hard to say because I was, you know, I represented a firm. So, you know, I mean, I was trading millions a day, you know, and millions a trade. And then I had traders who were trading millions. So, you know, if you consider me the firm, I mean, you know, millions of dollars changing hands constantly, you know, within minutes. So that's hard to say. You know, and I was a market maker in securities, so I would, you know, I would facilitate trades in securities. So, I mean, as far as the clearing firm goes, I mean, I think I got like 10-to-1 buying power. So, you know, if I had 50 or 60 million, I could do 600 million worth of a position. So it's a different animal when you're working as a firm. Or even if you're a professional trader and you're representing as a proprietary trader or a home office or a hedge fund. So, you know, the mechanics of it is different, like fundamentally what you could do. I mean, I've even participated in underwriting, so, you know, it could be close to $1 billion worth of transactions. So if you're talking throughout my career. But, yeah, you know, I mean, if I'm comfortable with the trade, I probably wouldn't exceed 50 contracts. I mean, and that's because then the liquidity issue, liquidity becomes an issue, and trying to get in and out of the trade becomes an issue. But if there's lots of volume and good volatility, then 30 to 50 contracts is easy to move around. When I started trading Amazon just to test it, I just bought straight equity, and I think I did 1,000 shares on that. So I think that's like a $3 million trade, right? I mean, just as an individual. But it just doesn't make sense to trade it like that. I mean, I made money, but the return on investment is silly. I mean, it just makes more sense to trade it with the option. I think yesterday somebody asked me what my biggest one-time hit was. So that's interesting. But you know what? You don't look at your portfolio like that, Finn. You're going to, you're going to start trading, and the way I like to do it is in units of 3, and I could take 3 pieces off. Some people do it in units of 4 and leave the last one as the runner. So they'll leave their stop at a break even and just leave that one on all day, and if it hits the stop, they're out, and their last piece, and if it keeps moving, then at the end of the day they close that position. But what you'll do is work in units, and then you'll add to your units. So you could start with or build up to 3 contracts, and then build your equity up, and then move to 6 contracts, and then move to 9 contracts, and keep moving, increasing your trades in multiples of 3. And the reason I suggest that way is that you could do that in one market, and you could learn that one market, and you don't have a lot of trades out there floating around, and you just increase your income by increasing the size of what instead of taking risks in all these different markets and things like that. You see guys come on here and ask me, what do you think of this? What do you think of that? Do you trade this? Do you trade that? And I know there's movement in everything, but I mean, that's not what my exposure to the industry is. What I've seen, and the trading desks I've been a part of, everybody specializes in something. Guys aren't sitting there trading all these different equities and all these different markets. Some guys trade multiple markets. That's true, like 2 or 3. But I mean, it's too much to manage. You don't want to do that. You want to master one, and then just increase your size, to your comfort. And if you start feeling stressed about a trade, then you're just trading too large, and that's fine. Back off, It's about making good trades. It's not about making a lot of trades, and it's not about making huge trades. All that wealth is a byproduct of doing a good job. And a good job is holding to your disciplines, taking your losses when you have to, and sticking to your rules. It's not a matter of whether you made money or lost money on a trade. It's how well you executed that trade. So that's and I'm going to drill that into your heads as long as you stick around. But that's what you want to make your priority. So the first thing you worry about is capital preservation. That's your first goal. Your second goal is sticking to your rules on why you take a trade and why you get out of a trade. And your third goal is to make money. If you go at it and your first goal is to make money, man, you're going to be chasing trades all over the place. And you'll do all right for a while, but then you'll give it all back. And everybody who loses money or goes back and forth between a loss and a profit and break even, and a loss and a profit and break even, if they just analyze their trading, they will find that if they just reduce the amount of trades they're taking, and increase the quality of the trades they're taking, they'll just have a steady equity curve that's up. Up, up, up. That's what we're all looking for. Consistency. You know, not these big home runs, just consistent. Climb, 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 climb. I mean, hey, if you socked away, you know, $1,000 a week trading, you know, every week, you know, you're doing all right, man. You're doing all right. Doesn't have to be a home run. That's $52,000 a year that you socked away, and then maybe you take your time, and next year you increase your volume and your size rather, and now you're doing $2,000 a week, and you know, you just became a $100,000 a year trader. Building on your own equity. I mean, if somebody was behind you and dropped $1 million in your lap and said, "Okay, trade it," and you know, you go from 1,000 a week to you know, 100,000 a week. But you know, to build your portfolio, that's how you want to do it: slow and steady, slow and steady. And that's why I said earlier today that don't overestimate what you do in a year, but don't underestimate what you're going to do in 5 years, because as you get consistent conservatively, you're just going to keep on keeping on. Look at that. Summon a gun. So it made this bear flag and triggered me out, and then did the retrace. It actually, this is, I wasn't even looking at it. Well, yeah, you know what? I wasn't actually in the trade, so I guess no harm done. But it actually did a last kiss, and I should have anticipated that. But you know, it's sensory overload when I'm talking. So it came back, it broke this high, did a last kiss, and took off. And that's a good entry too. When you see that last kiss and the momentum is moving up, you could have taken an entry right here. At 42.12 with a goal of 42.19. So that's a nice 7-point move. You know, on the options, you would pick up 3 points to get there, and then to see if you do the retrace. Now, this is our next line of congestion, right where my vertical line is. And if you look along the line, you'll see there's a pivot high right there in between this move. So we could call this the next point of congestion. But when you're in the trade and you're focused, you know, and you break through a resistance, you look for the last kiss. And when you get a last kiss and a break, that means this baby's getting ready to go. You know, that last kiss is just see ya, and then away it goes, and the whole attitude of the market changes. So we'll see if this sticks with it. See, so this is some valuable stuff, man. We break this market down and you get to see it. You know, it's not like listening to some yahoos just buy, it's ripping, it's ripping. This is helping you read the market, understand what's going on, and get accustomed to the language, because the market is telling you things. The price action is telling you things, and it's giving you subtle signals and saying, this is what I'm getting ready to do. And when you get comfortable reading the market, you're going to understand those signals, and you're going to go at it, and you're going to buy, and you're going to trade like a gentleman, like a professional. You know, you kind of laugh at all these guys who, you know, make a killing one day and lose it the next. And I mean, you don't begrudge anybody their success, but everybody in the world tries to tell them, listen, that's cool, but you know, you got to realize this is, you know, the next move. This is the end result if you keep behaving like this. You know, but I'm sure everybody here has raised children, and man, they just don't listen. Nobody listens until they get hurt. But I just swung the daily in there, and this is what I'm looking for. I'm looking for this baby to start building this this tail. And you know, it's interesting if you look. So this is my Keltner channel. And I use that really for my fixed income trading to give me a bias on the market. But this is the center line of the Keltner channel, and it's pretty much equivalent to a 20-day moving average. And what's interesting is that this trend is here, and this trend is probably off a 60-minute chart. When this was a 60-minute chart, I probably put this trend in because it doesn't. It's not logical right here. But you can see where the Keltner and the trend hit. And that's always encouraging when I see that, because it just shows me the validity of either the Keltner or my trend. I mean, when you have two indicators that meet, that's a powerful indication. So that's a powerful zone. So that's why it hit that. And nothing's ideal, so obviously it came past a little bit with the momentum, but turned around and got rejected off of that. The next line, if it did bust through that, this retrace and this trend line or this support line that I have in there, I mean, they're relatively close. So that's another powerful zone I would watch. I would look for a retrace there or a bottom, or it would be my target if I was trading to the downside on this. So reading the market, man, reading the market. That's what we do, and we do it so that you could do it off-grid, and that is why we are off-grid trading. So if you're new here, you know what to do. Shall I tell you? Do I have to tell you? I want you to hit the like. I want you to hit the subscribe. I want you to hit the bell. And then I want you to hit the road. No, I'm just kidding. Stick around. Stick around. I wonder what people would be thinking if they knew me and heard me doing this channel. They know my sarcasm. Like, that's what I do. I master at it. Advice, not my thing. Support, not a big fan. But if you're interested in a little sarcasm, I'm your man. Any feedback, anybody? Or is everybody getting tired of watching the market? And this guy's still gabbing, man. I'm looking at Powell. He's still gabbing. I mean, yeah, you know, these congressmen, they got nothing to do. People are starving all over this country. These guys could sit around and ask this guy ridiculous questions. I don't get it, man. What a waste of energy. You know, I mean, the country was built, and it was the local businessman and landowner that sat in Congress and made decisions on the direction of the country. And they had a feel for what was going on, you know, in the country. I mean, when your politicians are elitists, they don't know what the real deal is. They speculate. They read about it. They don't live it. They don't have any gut instinct. And they were probably born into money, so they never had to, you know, make a decision in their lives. It's a bad system. And they work very hard to keep the everyday guy out of politics. You know, if a regular guy comes up and wants to run for president, forget about it. They make him look like he's a lunatic. And every time we go through the debates, there were so many excellent candidates with such great ideas and so forward-thinking. There was that Asian dude, I can't think of his name, but yo, he was. Oh, I was so impressed with that guy, and Congressman Dan even, and on both sides, man, you could find just excellent people to run the country. But it's not the old money, it's not the old power. They're not getting in the club. And as long as we only have a two-party system, forget about it. We'll never have a real democracy. We get a third party, a viable third party, and we have a good democracy. These are just my rants and opinions on the system. And I can't stand how they keep independence out of debates and things like that. I mean, yeah, make it an open forum. You know, let everybody in. So many requirements to keep people out. You know, I mean, you know, I don't want Usher up there. Is it Usher? Who is it who keeps running for president? One of the rappers. You know, so you know, you definitely need to keep you know, people who are just using it as a marketing tool out of the arena. But it should be an easier way to hear what everybody has to say. And then, obviously, the American people need the courage to vote for somebody who's outside the Democratic or Republican Party and create another viable party, right? Because, I mean, there are deals cut between the Democrats and the Republicans. You throw a third party in the mix, and now the deals go out the window, and it's about who could do the best for the people. And that's what it should be about. Andrew Yang, yes, there you go, Andrew Yang. Yeah, Cayenne West. Yeah, that's the dude who I think he's running again next year. Yeah, that's who we want running our country. Cayenne West, a rapper. Which a lot of these guys are very intelligent, and a lot of them studied psychology and things like that, but or sociology or philosophy or and stuff. But again, yeah, it's a marketing tool. I don't want that. Yeah, Andrew Yang. Yeah, he was so impressive, man. I mean, really forward thinking. Really forward thinking. And then I caught another guy. I think it was on Bill Maher, black dude, and he was talking about racism, and he was talking about the how to resolve it, and how nobody's asking the right questions or looking at the right resolution. And that guy was an amazing guy too. And he and I share opinions. It's all about education, and but yeah, nobody's looking at that. Everybody's asking the wrong questions. Like even the issue on guns, not to speak on the merits of firearms or anything, or the rules, but everybody's carrying on about these mass murders and restricting firearms. And I mean, just look at the history, man. How well did that work for drugs? I mean, anybody have any problem getting drugs? I never had any problems getting drugs, and that's illegal. And then prohibition. They outlawed alcohol. Nobody had a problem getting alcohol. And they made alcohol illegal, and that was the rise of the mafia. That's where they gained their foothold, and they got. Where the heck is that? Oh, there it is. They built their empire off of that. And then they created the war on drugs, and that was the rise of the cartel. And you know who dominates the illegal gun trade in America? White supremacists. So, and these guys are manufacturing firearms in small machine shops in the woods. I mean, I've seen it. So outlaw firearms and create a market for these people, and now we have the rise of white supremacists, which is what we really need. So they're asking the wrong questions. Like one of the questions they should ask instead of gun control, because again, criminals don't follow the law, so they don't care what the gun control is. Why is it that I can't get a bottle of water or a nail clipper on an airplane, but some idiot could walk into a school with an AK-47? I mean, how is that possible? I don't care how many guns there are in the streets. If you can keep them out of the school, students aren't going to get killed. Let's start with that. Let's make that our first line of defense against these mass murderings. And then, you don't care. I don't care how many people are carrying nail clippers. I know they can't get a nail clipper on an airplane. I am not at risk of a manicure or pedicure when I walk on an airplane. I know that now. Do that for the schools. That's it. Keep guns out of the schools. First line of defense. And even if they're illegal guns, they're not going into the schools. Why? And you know why nobody's asking that question? Because it doesn't get votes. This rhetoric pumped out to an ignorant population gets the votes. We'll put a ban on guns. Well, that's super. And I'm not opposed to gun control. I think that, I believe that as long as guns are out there, you should be able to own them, but a sense of responsibility. And I don't mind registering. They're saying that the government's going to come for my guns. Well, you know what? I think that the country's falling apart if the government is coming to collect my guns, and I might take a different posture. So, yeah, Dave for president. Yeah, there you go, man. Yeah, yep. Yeah, that's what I say. But you know what? It's hard to rally people. And me, one guy screaming all this in front of the White House is just a lunatic, not a candidate. So, anyway, I'm hidden up here in the woods. A lot of guns are being stolen from the military and being used in street crimes. Well, yeah, I mean, yeah, hey, I'm from Brooklyn. I'm familiar with, the value of guns on the street. So, yeah, there's a big market for illegal guns. And that's not the people who could go and file and get a carry license and carry the guns. You know what I'm saying? So the people that they're inhibiting from getting guns are not the ones that you got to worry about. You know what I mean? So, hey, take the guns away from the people that you just might want to have a weapon when, things are a problem. And just create a bigger market for the criminal. That's all it comes down to. Because, I mean, that's what's going to happen. Good, honest gun owners are going to buy illegal guns if you make guns illegal, just like in Prohibition. And, just like, hey, with marijuana. At this point, marijuana is becoming illegal all over the place. It was illegal for years. I don't think anybody had a problem getting a bag of weed. You just up the price. That's all you did. I mean, it's ridiculous. The laws don't work. Criminals do not follow the law. And that's what we're worried about. I know tons of people who have carry permits, carry guns. Really, really slim chance that these guys are going to be killing people randomly. I mean, they'll never even use their firearm in defense, And I know people who would rather take a beating than pull their gun. And their general theory is, hey, you know what? I could take the beating. The guy's not going to kill me. I'm certainly not going to kill him. And that's fine. But in the event that somebody pulls a gun and you need to defend yourself, I think you should have that right as an American, as a citizen. I mean, I believe in being pragmatic as opposed to idealistic. And ideally, if you could wipe all the firearms off the face of the earth and I don't have any threat of being confronted with a firearm, I'm down. I could do without them. Hey, I'll throw a stick at a deer to try to get a little meat. I'll run up and bite him on the rear end if I had to. But, I'm handy with a bow, so I could always feed myself. But if you can't accomplish that goal, then, don't force me to be a victim, and don't lie to me and tell me that you're using a tactic and it's going to help me when historically it never has. The military doesn't have a clue right now how it's happening. I'll tell you how it's happening. There's a few underpaid privates in there that know exactly where the guns are and how to get to them, and they're selling them to the highest bidder, usually like a biker gang or something. Or if it's large scale, then you got some international guys doing it. Or you don't even know what the military's up to. Selling firearms where they shouldn't, and all the special ops. I don't know if you guys recall the Iran Contra situation, or gate, or whatever the hell they call it. I think that was the Carter era, where the military was selling guns and Congress didn't know about it. Yeah, it's not just underpaid privates. Yep. It's definitely overpaid individuals and people of authority, and people are subject to greed. So, how do you control this? Ollie North. Yeah, that's it, Ollie North. But he was a smooth guy, man. You know what? In the financial industry, I was always under scrutiny, always testifying before the SEC or the NASD and things of that nature. And I learned so much from watching Ollie North testify, just like, I'm sorry, I don't recall. Because nobody could blame you. You didn't want to tell them something, I don't recall. And, hey, how do they know whether I recall or not? Excellent. The testimony was excellent. I mean, if you like the law and studying the law, I think he was just remarkable. And the interesting thing is they knew he was lying, but you can't prove he's lying. So, nothing you could do about it. I'm sorry, I don't recall. That's all he said. He was brilliant, just brilliant. But I think it was Gore who was grilling him on the money he spent on his security system. And it was over bin Laden. And he had mentioned bin Laden in that testimony. And he said, and if you knew what I knew, you would do something about this guy. And Gore kind of laughed at him, even mocked bin Laden's name. Like, bin Laden, I think he said it sounded like a drink or something like that. And then, obviously, we all know who bin Laden was, who was also CIA trained to fight the Russians. Oh, see, but I shouldn't forget about it, dude. They're going to be knocking on the door. All right, I retract that whole pontification. Ollie North, yeah, I remember. Yeah, no. Wow, we're dating ourselves, huh, Kerry? Oh, look at that. We're moving back to yesterday's low. We're only down 8. Yo, and that bar is doing exactly what we wanted that bar to do. And here I'm gabbing and missing this whole move, man. What is that, like a 30-point move? Oh, my goodness. Here at Irresponsible Trading. Okay, so we did participate in that. Oh, no, we didn't participate. We were just screaming that sucker out. And we let ourselves get whacked out when we should have, theoretically, of course, should have played the last kiss. And that would have been a good entry on it. And like we said when it was working that last kiss, we said, yo, that last kiss is usually the goodbye to a really impressive move. And here it is. Here it is. So with a little discipline and focus, this would have been a killer day, although I did have a good day this morning. But that would have been a real sweet run. And those are fun, man. If it, you know, I would have been one off and, you know, or one unit on and just let this keep climbing and climbing and climbing and just following the lows, you know, trailing under the lows. And now we're about to break through yesterday's low, I think it is. That line, that red line is yesterday's low. And look how beautiful that daily bar is. So this is telling me, oh, where am I going? This is telling me that, yeah, I mean, look at that confidence in the market, you know. And you could see generally that happen over here. You could see it happen over here if you're following my cursor to the left of the channel. It went down, made its correction, got rejected, made a nice hammer, and then boom. And it gapped up. I mean, it's hard to get involved with that. But at least it gives you your bias for the day. It tells you, hey, we're pretty damn positive on this market. So you know the next day you're looking for bullish entries. And, you know, even you could play the bearish, but you're going to stack up your bets on the bullish entries and be a little more conservative or tighter with the stops on the bearish entries. And, you know, you can trade back and forth in the market. This isn't quite a hammer, but still a nice long tail. So, you know, I love when I see this because it just flushes a lot of nonsense out and gets us ready for another move up, which is kind of encouraging. And really, I mean, how do we decide what the next move is? I mean, we have no targets because there's no resistance, you know, because we're making new highs. So what I like to do, and I could add Fibonacci levels to this. So I'll do the fib in the opposite direction, and it'll give me an extension. Or some platforms have Fibonacci extensions, and this one may too. But I just have this on my hotkeys, and it's easy. So my next goal on this move would be the 308 area, where this is at 308.35, I believe. So if we close like this and we break tomorrow and then we break the high, you know, my goal is 308.35. And it's not necessarily one day, which would be sweet, but yeah, you know, I think we could actually start grinding up there this summer and ultimately hit that point. And for all you AMC addicts, you know, rising ship lifts all tides. So, and Jerome is still going at it. I think I could be the Fed chairman. I have a whole bunch of rhetoric. AMC on the daily still looks like it's making that topping pattern, Matt, and it doesn't really look like it's participating in this move up. Interesting. Makes me wonder. So really, they just got to rally the troops to try to put some buying power into that thing and push that past the high. Okay, I'm going to step away from the mic for just a second, take a peek outside. I heard there's this thing called the sun that shines down out there. I'm just going to go make sure. And I'm back. All right, so anybody have any questions or any input, any critiques? Can you guys hear Jerome Powell in the background? I'm just worried that I'm going to get another copyright restriction. Oh, I think he's done. I think he's done. Or everything just went silent. Yeah, he's done. All right, later. This event has now ended. All right, cool. So now we get to see what the market's going to do. And what do we got left? We got a half. Wow. Like I spoke for like an hour. We got a half hour left. I'm not going to be too aggressive. I had a pretty good day. That was a nice move right there and is trading off. Let's just follow it a little bit. We can get rid of these fibs. Here's an interesting thing I want to point out. That yellow line is today's opening range high, which was the high of the day. And we just moved on back there, tapped it, and then turned around and traded off. And busted right through the trading range low. But it's such a narrow field that, you know, in a normal market, it's not going to trade like that. But look, came down, and it's kind of testing that cloud, good target, which is our 23. So this is good for a double top. I would look to see it come up and retest this if it holds this 23. Otherwise, you know, it's doing the single top and a retrace, and you know, it could trace all the way down to the 2078 area. And the momentum would support that it's going to break through that 23 area. Nope, no questions, huh? All right, cool. Everybody just kind of falling asleep on us. Got me streaming in the background. Dave, your friendly neighborhood trader. Down 16. We were down 8 a little while ago. So 8-point swings, not bad. Now the market's getting some energy and trading a little normally. And, you know, it's actually trading in good order. You know, making a nice move up, doing a little retrace, a little correction. It's an orderly market. So I've mastered my stream, and I've got to work on my mic. And Anthony would be good enough to send me a mic. What a good and generous man. Actually, hanging out online all day, on the mic all day. I was referring to your question if we can hear Powell in the background. All right, cool. Yeah, it's good if you give me contact on your answers. Like, no, we can't hear Powell. But all right, cool. That means they won't restrict me. I appreciate the feedback. Oh, somebody's ribbing me because they think I said silicone, referring to semiconductors, but it's silicon and silica, where silicon comes from. So silica is like a mineral, and the largest deposits are in Asia. But I think we have some here in the States, upon information and belief. Another dude just texted me. What'd the Fed say? I'm driving. Like, I'm going to break it down for the guy. I mean, he's in the industry. He wants to know what the Fed said? You should tune into my channel. So it's quiet, man. Give me something to talk about. So I've got my soapbox. What do you want to hear about? Firearms, drugs, the alphabet people. You want to hear my view? No. I guess everybody's too busy. But you're not too busy to hit the subscribe and hit the bell and hit the like and help me out. Drop a comment, listen to a few of my training videos, or one of my training videos or my commentary. At the end of the day, I try to do a wrap-up on the market, kind of set my head for the next day and what I'm expecting for the next day. So you guys could check out all that content. If you could share me on Twitter and Facebook, I think that works. Somebody's doing it, because I had seen that Twitter was actually one of my largest resources for my subscribers. And apparently we're doing really, really well on accumulating subscribers to our Free Folk Nation, based on what the average and the statistics are in YouTube. So this is actually making it very fun to see what we could accomplish with our rhetoric and our commentary. And really, it's everything that you guys are contributing in the chat, because that's giving me food for thought. And apparently, we're just a bunch of interesting people, because people just keep joining us to see what we're talking about and what we're doing over here. We might even get to the part where we're making money, trading. Get past the talking. Be great if I could figure out how to get paid like $1 a word. Probably wouldn't have to enter another trade. I'd just be doing it for fun. Looks like Amazon's taking off. Amazon's kind of shaking off the Fed meeting and getting back to business. Apple is making the move. Actually, the guy who asked me about what the Fed said is the trader I was telling you about with Apple. So I'm just going to ignore his text. Unless he hits the like, and then I'll tell him anything he wants. Maybe I shouldn't eat an orange in the mic. Oh, look at S&P. See, we made that retrace. We went down to 33. And if anybody was paying attention earlier today, I think I was talking to Finn when I was explaining how I use the fib. We went down. We didn't even touch the 33. So I can consider this a double top. If we hit about the 38, broke the 33, I'd want to see this move up, make 2 touches. But I can consider this a double top. Here being one, and this move maybe being another. And I'd like to see it hit the top, do a little retrace, and then bust right through. And that could be a good trade if anybody was so inclined to take that trade. And we have a lot of resistance though going up. So we bust through this 38, then we got to fight to get through the 44, and all of these little lines are creating resistance. And I've already banked a bit of cash, so I'm not even going to bother. But it looks like it's going to give us our exceptional hammer for the day. And if we end positive, that is just a monster hammer. Oh, did you share my channel? That's cool. Yeah, I look forward to that. Hey, where are you located? Do you mind sharing that? At least, are you here in the States, or are you overseas? Mr. Finn, I was actually talking to you. I don't know if I made that clear, but if you don't mind sharing that, I'm just curious where you are. The stats too. I have some people who are following me over in Europe, but most of it's the U.S. But it would be cool to get a lot of folks over in Europe. They'll have a lot to add. Oh, and look at that. We made that double top. Isn't that a beautiful thing? Look at that perfect double top and then a retrace right there. That's more retrace than I wanted to see for the breakout. And today is Wednesday, right? So really nothing for me to do as far as an income trade goes. So I'm just going to chill out and enjoy my time with my free folk friends. Enjoy my day. I'm at such a crossroads though, because I'm locked in on the channel, but I'm dying to get down to the boat, but I'm not confident in the quality of the stream that I'll have from the boat. And I want to deliver, but my heart is yearning for a little salt water and some sun. Oh, first world problems, eh? But I think I'm going to try it. Maybe not this weekend. I have some work to do around this place to get it ready for my departure. So maybe I'll stick around next week and then head for Europe. Slovakia. Oh, wow. How interesting. If you know it. Yeah, of course I know Slovakia. What do you mean? That's like an indictment on the U.S. Education system. Yeah, I know Slovakia. Um, most folks from the States still know it as Czechoslovakia. Yeah, yeah. Well, you know what? That is an indictment on the U.S. education system. Um, oh, that's cool, man. Stay where the stream is good. The boat will be there. That's a little self-serving, eh, producer? Taskmaster. So you're trading into the evening, apparently, Mr. Finn. So what's the market going to do? It looked like it kind of dried out. Tested that yesterday's low and then just traded back. And the bar is just a little less attractive at this point, the daily bar. But whoopsie. But obviously at the 38 point right here, where that low is, that baby's looking real good. Yeah, and that's what that red line is. Here's yesterday's low. So it's kind of banging off of that. So hopefully into the close, everybody buys up a little bit. What do we got? Oh, we only have 15 minutes left to the day. Wow, today went fast. I mean, I guess we had a little dry point. The morning was really quick. Well, I guess because we got a pretty decent trade, we had a lot to talk about. It felt like we started off and things were a little dry and slow, but the day got kind of interesting in that. But this is where we usually start seeing that buying in. And that still is, nothing to sneeze at, that tail. But, a little bit higher, closing above yesterday's low would probably be more encouraging as far as a hammer. Closing up would be great. And, I mean, we're only down 17. So, I mean, that's really not impossible in the next 15 minutes. So I would like to see that. And do some sort of market dance to make that happen. I can get my buddy Nicky, maybe he'll get a shoe out and start beating the market. That's a flashback to earlier conversation for those of you who just joined us. Yeah, that is perfect, huh? You knock out your day work, and then you can focus on trading. Yeah, man, beats sitting in front of a screen watching Game of Thrones, and you're prepping for your retirement. Do you have access to all the platforms that we have, like TradeStation and Thinkorswim, or what kind of platform? I think you could do Interactive Broker. I know those guys are pretty much everywhere. Yeah, the chat's a little slow for me, so that's what the dead air is. I'm just kind of waiting for the response, unless obviously Finn could be busy and just not making the response. So now the market just looks like it died off. It's barely moving. It's just ticking away slowly. There's got to be some closing trades. What time is it? 1 minute. Okay, the last on this turn of the minute, I bet we start picking up a little action. That double top was kind of interesting. And let's move this daily out of the way. And take a look here at the quality of this. Oh, we're moving down. Well, I certainly don't want to see 100% retrace. That would be just a real scary bar. But nothing was said, really, that should make anybody uncomfortable. I mean, you know, we all pretty much know the story. When the time is right, they'll start easing off on their purchases. They're not doing it now, but they're going to give us a lot of heads up so that we know. So what's the story, man? Where are the bulls? So I'm trying to see what kind of noises you're picking up, and I see a little flashing. I'm wondering if you're getting background noise or breathing. Am I breathing into the mic? Mr. Dillon, you're doing great. Yes, sir, I appreciate that sort of input. I'm glad. I wonder if you're still with us. Andrew Young, Nicholas Stewart. So that's cool. People join me and stick around all day and just see what's going on in trading. And really, that's it. You know, as far as traders go, I mean, you know, in a market like this, what I do, I took one trade, and it was a really nice trade, and I made a ton of loot. And yeah, you know, I mean, if I didn't take another trade all week, I'm still living pretty good off of that trade. You know, it's just a matter of the size that you're willing to take. And yeah, you know, you don't rush it and you don't force it. You just go slow. We don't have Weibo or Robinhood. Well, that's good, man, because that's not a good trading platform, or most of the U.S. big players yet. eToro and OK trading for now. But the U.S. dollar weakness is often killing some of my profits. Oh, that's an interesting concept right there. But are you harvesting your profits right away? I mean, if you just leave, I'm assuming that you're trading in U.S. dollars. So if you just left it alone, I mean, there's probably just a better time to take the money out and convert it. I used to do business overseas with Australia and Europe, and I would always watch the currencies like the pound and things like that, and sometimes I would tap dance around the bills because it looked like the pound was going to trade off, and you know, I could you know, buy more sterling, and so my materials are cheaper. But yeah, you know, if that wasn't the case, I you know, sometimes left money in sterling, just try to play the market that way. And are you subject to ticket charges and commissions? Because that's something that's going on nowadays that didn't happen back in the day, where you know, you could trade now for no cost or minimal cost, trade equities or mutual funds. And prior to that, for a retail trader, it was like a zero-sum game, because you would have to cover your cost of the ticket So scalping really didn't make a lot of sense. So guys that were in and out, in and out, in and out would end up taking a beating because the commissions and ticket charges would eat up everything they make. And that's a conversation that I and some of the guys I used to work with have often because, that's what we were experiencing. Even as in-industry traders, we still had very high costs compared to what goes on today. Actually, in-industry traders, I feel, always had higher costs than retail traders, just because of everything the regulators tag on your trades. But, it's interesting. That's what kind of fueled trading, that, zero commission trades and stuff like that. So, everybody's out there pulling the trigger on execution. So we did a 30% retrace, and we're consolidating around that area a little bit. It looks like the 30-second is rolling around, and the 1 minute Mac Daddy is flattening. And obviously, from hanging out with me, you know that I trade the momentum, or I consider the momentum. So here's the 1 minute, and you can see it's starting to flatten out. It's still a little bearish, but we're looking for a turn. And it doesn't look like it's going to give us that turn. It looks like it's kind of trying to make that move for the 38% retracement. The 2 minute is still quite bearish. You can see it's just pushing down, like my sound effect. And the 5 minute, I mean, that's still bearish, but it's not aggressively bearish. It looks like it's going to end up making a higher low and begin an uptrend, which, right here is very possible, that we're looking for a higher low on the 5 minute and then a break of that. But, I mean, what do we have? 4 minutes left. I mean, this looks like this is where we're closing. Anything can happen in 4 minutes, but I would definitely argue that the S&P is going to close down 20 today. Oh, this is my 30-second shot. This baby stays here. No. So people are just fading out. But I think we had a good day, man. I think we might have got... Oh, there we go. Pushing it. We just tagged that 38. And we're moving lower. Oh, come on, man. Don't beat us up. We got like 2 minutes and 30 seconds left. Boo. So let's just watch that daily close. I mean, it's a nice long tail to the downside, but with this little push down, I mean, this might be a little indecisive bar. We'll see where we open. I mean, we could open up high, or maybe we'll open up in and have an inside bar tomorrow. I mean, this is 20 points right down here. And I believe this is a 13-day EMA. And it looks like it's kind of holding as a good support. But now it's just cleanup trades. You know, people are just cleaning up. So it's really not indicative of what the market's feeling. You know, people are just cleaning up their books and closing out positions, and it's bouncing all over the place. I'm still here till the end, then I'll go through later on tonight. All right, cool. It's good to have you, Tommy. You know, always good content, good questions, and I appreciate your support. And everybody else who has contributed to the chat and comments and the likes and everything. But the comments are really good, man. I enjoy it. I enjoy the conversation, and I enjoy telling you guys how it is I squeeze a buck out of the markets. So now we're just watching close. 30 seconds. Don't do it. Oh, look at that. The last 30 seconds, it's got to make the move down. Come on. We like green. Everything's so green. What do we end on? We end on a hammer? Nope, we end on a little shove down. Oh, look at you. Look at you. So disappointing. There you go. It's a wrap. It's a wrap. All right. So the market closed down 23. And, yeah, that's fine, really. I mean, we had this big, beautiful move. So can't really argue about it. But that's the Feds, folks. Yeah, you know, erratic trading during the day, but nonetheless, we did get a really decent trade-off. And then we missed one because we were enjoying ourselves and gabbing. And that just goes to show you when you're trading, you got to be fully focused, man, because you never know where that next trade comes in. And it was a classic trade, too, that we a textbook trade, shall we say, that we missed, and we would have done well. But there was still a decent trade that we caught, and we made some money. And, yeah, you know, hey, that's a good day. Can't argue about that. So I appreciate it, everybody, and I hope that my streams are getting better and better, and everybody is enjoying it. And I appreciate all the commentary and advice and suggestions and participation that everybody's making and or doing. And hopefully we keep it going. I know I'm going to stick it out, man. I'm committed. So if you guys are here, I'm here. And don't have a fear of success. If the channel grows, I will be accessible to you. I promise you that. So if you can, share the stream. Share the channel with some people. Make sure you've hit the like before you go if you're new here. And hit the bell so you know when I have things going on. And hit the subscribe if you haven't, or if I've said that already. Hit it. So yeah, just to recap. Subscribe, bell, like, couple of comments,